I'd like to welcome you all to the July 7th City Council meeting, and we'll start with roll call.
Lane.
Here.
McDaniel.
Here.
Murdoch.
Here.
Walker.
Here.
Thank you, council. Everyone's present, Mayor.
If you'll please stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right. First up with public hearings. Consider vacations of portions of utility easements, sewer easements, landscaping easements across Lot 18, Block 1 of the Brady subdivision.
Yes, council, this relates to agenda item 4C. So if you want to turn to that agenda item in your packet, basically there's been a site plan approved by the Planning Commission for a 51 unit apartment complex on about 5.5 acres that was originally platted as Lot 18 of the Country Village Apartments. The applicant wishes to replat a portion of that Lot 18 to accommodate the new site plan that has slight modifications in utility easement layouts to accommodate the new development. So on the agenda, later on the agenda tonight, is approval of a final plat for that area. Remember, final plats come to you after recommendations from the Planning Commission. In the final plat document itself, in your packet, there's the final plat document is shown along with this one sheet of the site plan that was approved by the Planning Commission. The plat shows existing easements and proposed easements, and it also shows easements that are to be vacated. So these were ones that had been planned to have utilities in them under the old, back in the early 2000s, there was an apartment complex that was going to go here, and they laid out utility easements, so those are platted. Those would be vacated by this plat. So you might remember anytime we vacate a public utility easement, it requires a public hearing, and so that's why the public hearing item is on the agenda tonight. And we've contacted our franchise utility providers, and no one has any objections with vacating the easements. And there are actually 3 of them. There's a landscape easement along the east side of the property. There's a sanitary sewer easement and a general utility easement that are to be vacated. So we should, in the public hearing, I'll answer any questions.
Are there any questions from the council at this time? Okay. We'll open the public hearing. Do we have anyone that wants to speak to that issue? Yeah, come on up. Hi, Albie.
Hello. Good evening. Thank you for the opportunity to speak. My name is Alvy Cater, and I reside at 5602 Lewis Drive, Shawnee, Kansas. I am employed by the school district, and I am here as a representative of the organization to share our concerns regarding the request for a 10-year, 100% property tax abatement related to the multifamily housing development, and I will keep my comments brief.
We're not addressing that at the present moment.
Okay, I'm on the wrong Yeah,
Sorry, I mean, we're still at.
There's two public hearing items, that's the next one. That'll be-
So I retract my agreement, and I'll do it later. My apologies.
Sorry about that. Do we have anybody else that wants to speak to that issue? Seeing none, the public hearing closed. Moving on. Public hearing, second public hearing is consider proposed issue by the city for $12,200,000 industrial revenue bond and a 10-year 100% property tax abatement for proposed 120-unit apartment project at 8900 to 9100 Commerce Drive. Go ahead, Mike.
Patrick.
That's a good
Yeah,
call.
Mayor, I'll just introduce the item and then I'm sure the applicant would like to address the council as well as we have City Financial Advisor Jeff White. But the only action item that we have on the agenda for this item is a resolution of intent. And what that resolution entails is first and foremost, issuance of the city, by the city, of industrial revenue bonds in the principal amount of $12,200,000. Now, just to be clear, that simply is a statutory thing that the city can do, which essentially will allow the developer to not pay sales tax on construction materials. So it doesn't have anything to do with the city's credit rating. The city is not on the hook for those bonds if the project fails or does not materialize. And all costs incurred in, the issuing the bonds, the transaction costs, none of those costs are incurred by the city. The resolution of intent also addresses the level of abatement. As you know, the applicant has requested a 10-year, 100% tax abatement. That is the maximum allowed under Kansas law. That, the resolution that you have in front of you, we left the percentage blank for you because we knew there'd be discussion on it. So that's just something we need direction on from you as to what level of abatement you are comfortable with. And then finally, in the resolution of intent, there also is a section that discusses items that you as a council may want to include in a future pilot agreement. And what the pilot agreement is payment in lieu of tax agreement. And within that agreement will be addressed again, the percentage of the abatement, but also other items that you might be interested in imposing on the developer as consideration for the tax abatement. And those considerations that are in the resolution currently are in section 4. And you can just see them listed, but one item is the company's commitment to involvement in the DeSoto community, negotiation of the impact on city services and infrastructure, screening along the west side of the project. There have been discussion about a privacy clearance. We talked to the developer about that. There may be complications in doing that, so we just, at least in this document, it's just addressed generically as screening. Also landscape maintenance plan, and then any requirements related to the exterior building materials. So again, though, that pilot agreement that would set forth those specifics would be taken up by the council at a later time, but I know the developer and bond counsel would like to get your direction this evening on what big picture wise, what things you would like to see in the pilot agreement. You know, maybe it's, maybe the things that are in the resolution of intent, some of those come out, or maybe there are things you want to add to that. And as you were provided in your packet, there was a cost-benefit analysis performed pursuant to the city's policy on economic incentives, as well as required by statute. Jeff White, the city's financial advisor, performed that analysis. And then subsequent to that, Jeff White also performed some further analysis on the incentive question. And as part of that analysis, I know the developer provided information, and I know today the developer provided a letter that's been placed on your table for your consideration. So with that, this is a public hearing item, so but I'll stand for any questions that you have of me on the item.
Right.
I don't have any for Patrick.
Not right now.
You guys? Okay. At this time, I'll open it up to public comments. Go ahead. Come on up, Daryl. Yeah, we do have a 4-minute time limit.
Does the applicant just have 4 minutes?
Pardon me?
Does the applicant just have 4 minutes? I'm just joking.
Well, that's a different deal.
Yeah, it usually is. I come before you to speak against the proposal brought before the city to provide 100% tax abatement for an apartment complex. I was apparently under the misconception that incentives were given to Harps Grocery to make it an anchor business that would attract other businesses without any additional tax waivers from the city and its taxpayers. The use of tax abatements by government bodies is justified with the same argument that children use with their parents. Everybody else is doing it, so why can't we? Evidence shows that abatements are not the primary factor that firms are making their location decisions. Schools, transportation, available workforce, etc., are part of the equation. And as was expected, will it be profitable to locate here? Besides, businesses definitely work the system, i.e., we won't come unless we receive substantial concessions. Or we want to expand our business in your community, but if we don't receive additional abatements, we'll leave and move elsewhere. Cities often feel desperate in their attempt to bring in business with abatements. When used, they have the potential of making poorer citizens and smaller businesses worse off. Unfortunately, fear rather than rational reasoning affect too many human responses when it comes to decision making. The same 4-lane highway that makes DeSoto attractive to manufacturing businesses has and will continue to have a negative effect on many retail businesses not visible from K10. There was a time when DeSoto had 4 full-service grocery stores in Old Town, as well as a hardware, hotels, lumber yards, medical practices, with a population of less than 1/4 of what it is today. They have, for the most part, disappeared from the older part of town. How have we survived all these many years without those essential amenities in DeSoto? The automobile and K10 highway have made it both possible and impossible depending on what you sell or what you need and where you're located. I was quite surprised that tax abatements were something that could be offered for the construction of apartments in Kansas. It illustrates many things in today's Kansas that are legal, but being legal doesn't mean they're just. I'm aware that no one can change the past. Conversely, our actions today have multifaceted outcomes on the future, both yours and mine. I thank you for your time.
Thank you, Daryl. Do I have anybody else? Come on up. coming.
Amanda, would you like me to repeat my greeting?
I have it, so
Okay,
thank
you
you.
got it. Well, on behalf of the organization, the school district, we appreciate the partnership the city and the school district have forged over the last few years. And most recently, we witnessed the strength of that partnership with the outcome of the new grocery store. And our Board of Education was sensitive to your feedback regarding the common name of the school district. And this evening, we hope that partnership will continue to flourish as our two organizations work together for the greater good of our community. Specifically, we ask the governing body to carefully consider the concerns of the school district regarding the 10-year, 100% tax abatement request for multifamily apartment facility. As you may recall, school districts in Kansas are currently funded through block grants. And from what we know today, block grant funding will continue in Kansas. And what that means essentially is that funding is held steady year to year, and we appreciate that. That also means that there are no immediate new dollars available for increased student enrollment. The proposed development is projected to increase our enrollment, which adds additional cost to the district and pressure to our already stretched resources. In addition, if the tax abatement is approved, the development would not contribute to the district's capital outlay fund for a decade, meaning that all other taxpayers will carry that burden. If the council decides to approve the incentive package and the project goes through, there will be new residents in the city of DeSoto. The city would more than likely see an increase in sales tax revenue. Unfortunately, the district does not share in that revenue. We respectfully request the governing body to give careful consideration to the concerns of the school district regarding this tax abatement request and the broad implications should the incentives be approved. Thank you.
All right, thank you. Do we have anybody else who wants to speak to the issue? Okay, come on up. Give us your name and address.
My name is Sally Pickett. I live at 33555 Valley View Street in DeSoto, Kansas. I'm here this evening representing Engineered Air. I'm the human resource manager. I've worked there for 15 years. And one of the problems that we find when we're recruiting and trying to hire is the inadequate housing in DeSoto. So I was asked to come here by the president of the company just to share that concern with you. Thank
All
you.
right. Thank you very much. Have anybody else who wants to speak to the issue?
Yeah.
I'm Mary Leslie. I live at 8513 Frederick Drive in DeSoto. I am the plant manager for Custom Foods, which would be directly across, we're at 9101 Commerce Drive. Just like Sally, we have the same issue with our workforce. And because the housing is so critical right now, these apartments would mean a lot to our workforce. It would bring new potential employees into the work, not only for us, but Hutamaki, for Ririg, for all of us that are hurting for employees in this city. Along with, the growth. If we don't grow, where's our future at? Sometimes we have to take risks to reap the rewards. So I just want to say that on behalf of Custom Foods, we're for it.
All right, thank you very much. I don't have anybody else that wants to speak to the issue? Come on up.
I'm Deborah Thrasher, 8260 High Street, DeSoto. And I'm representing several people that have rental property. And we know there is a need for apartments. I have 3 on a waiting list right now that want apartments. They're single, no kids, or young couples that are just married and they want to work here, but they want to live here, and they don't want houses, they don't want to mow lawns, and they don't want maintenance. So there is a need for that. There's people that would like to live in apartments. And I've lived in an apartment, I have no kids, so I don't think it's gonna affect the schools that much.
Anyone else?
Sure, I'd like to just say.
Wait a minute, we got a,
You got two? Go ahead.
You were up there first.
go ahead.
My name is Tim Gomez. I live at 33995 Orchard Drive, just about 200 yards from where the complex is going to be built. A couple of questions, and they really just came up when Engineered Air and Custom Foods came up. I know you run Custom Foods. My mother is LaDonna. She worked with you for a long time.
Great lady.
Part of my question here, though, if they say that there isn't housing, there isn't apartments for the people to live in, if these companies were to pay a livable wage for a person to be able to invest in the town and live in the town, purchase a property, not rent a property in town, wouldn't that be more sustainable for the community than having somebody rent here, be transient, decide to leave eventually? Also, we have 2 apartment complexes in town. Both of them have been low-rent apartment complexes for as long as I can remember. Are we looking at the same future for these apartments? And if so, you're looking at building these same apartments behind my $220,000 house? It's just a concern, and then the other concern that I have about it is, if I were to build something, say I wanted to build a new house, I can't come to you and ask for tax abatement to build a new house. If you don't have the money to build something, don't you think that maybe you shouldn't build it? That's it? No?
All right, thank you much. Anybody else? Come on up.
Hi, my name is Joe Bazone. I live in Olathe, but I own a lot of property here in DeSoto. I've developed a lot of things here in DeSoto. I support DeSoto 210% every single day of my life. We have to make a decision. It's a real simple one. Do we want to grow, or do we want to sit like we are? So we can take those lots, and I own the most land there out of anybody, and we can continue to grow worms, grow weeds, grow bugs, or we can turn around and do something and create some e-commerce that's going to grow humans, that grow businesses, that grow enterprise. So when you look at our system today in DeSoto, it's kind of sad, because we don't have enough housing, we don't have enough people. We're getting a grocery store, we're looking at hardware stores, we're looking at development, and we just have to make a decision as a small community. If we want to grow, let's do this. If we don't want to grow, throw it in the trash, run away. Because we're just going to grow bugs, because that's what we've done for 20 years I've been here. I stood on that lot that I own with Jerry Kelly, which is the individual that opened Zapata Jewelry in Lenexa. I sent Jerry to Lenexa. At that time, this city would not allow tax abatements. At that time, I could have made 5 times what the value of the land I own today is at that time. Appraisers today have undervalued DeSoto because there hasn't been growth here in about 7 years in that area. We now have growth. We have General Store, we have the KC store, we have a new grocery store, we have the potential for a hardware store, and we have a potential to have employees that are qualified. And most of the companies here that do have qualified individuals pay more than a livable wage. So, thank you.
All right, thank you, Joe. Do we have anybody else that wants to speak to the issue?
Hi, my name is Justin Milburn. I live at 8220 High Street. The discussions I've had with business owners in DeSoto is the same thing that everybody's been saying. There's a shortage of housing in the town. And I've lived in this town for 11 years. And I think it'd be great to get those employees that are commuting from other towns to live in this town so they can spend money in this town and keep this development ball rolling. I think it's been 9 years since we've had a grocery store in town. And we finally got that back. We're raising Commerce Drive, we're making things positive in this town. I think it'd be great if we'd allow this development, the apartment community, to come in so we can keep those people in town and that'll keep this ball rolling, to help this town out and keep it going. So, thank you.
All right, thank you. Do I have anybody else that wants to speak?
Hello, I'm Jan Giles, 33970 Orchard Drive. Lived here 31 years. You know, that's been a green space forever. I'm not disputing the fact that we need additional housing in this area. I just don't think that's the land to put it on. I think that should be for commerce and industrial and bring money into the city that way. I think there might possibly be other areas in town for those apartments that may already be zoned. I don't know that. I haven't done any research on it. Personally, I've been in HR and accounting for all of my career. And the last 15 years at one, place that people are asking me, are there homes in DeSoto? We want to move to DeSoto. They don't want apartments. They want homes to live in. They want homes to buy. And that's what we need here. We need people to come and invest in this town and as homeowners. I don't feel like apartments, people aren't invested in that. It might be a point they'll stay for a while, but they're gonna look for something permanent to raise their families. This is a great town. I love this town. I've supported it for a long time. But I just don't think apartments in that location are the right things. Or maybe we should look at housing, building homes here for people to buy.
We spent money on studies that shows that we're behind in all kinds of housing, senior housing, regular housing, and apartments. So we're behind the ball.
On all of it is what you're saying, right,
Yeah.
right. I just don't think that the location that they're looking at for these apartments is the right fit for them. I really don't. It just seems that Commerce Drive should be for light industrial. That's what that area is for a dental office or a hardware store or something. You can go in there. I'm not saying don't build something there. I just don't think the apartments are the right place to be there. It's not the right place for it. Thank you.
Do I have anybody else that wants to speak to the issue? Come on up.
Good evening, Mayor, council members. I'm Matt Goff with Barber Emerson Law Firm here tonight on behalf of the applicant, K10 Place LLC. It's been a little over 2 years now since the Novogradac Company study was completed and determined that in its market conditions report that this town needs more multifamily units. Since that time, the Commerce Park corridor has been changed permanently by the addition of the Harps Grocery Store. There is an opportunity now for the city to help provide more people the opportunity to live in DeSoto. Whereas today, so many of the people who work here leave DeSoto when they get off work. This application satisfies the city's policies with respect to economic development incentives. The 120 unit project being proposed will cost over $12 million, and that's a significant capital investment in DeSoto. These units in this part of town, with the type of access that it has, will spur economic development in Commerce Park. It'll encourage additional investment there. It enhances the city's housing market, and when you enhance the housing market, you enhance the economy of the city at large. The project is in a targeted industry. Housing has been one of your priorities for some time. And this is in an area where in the next 5 to 10 years, hopefully you'll see a lot of new things and new development. Mr. Travis Hicks is one of the applicant's owners. He's a native son of DeSoto, and he knows how to be a good corporate citizen. But the truth is that this project does not happen without an IRB. And that IRB needs to provide a sales tax exemption on building materials and construction costs, and it needs to be a full tax abatement for 10 years. You received a letter from me today And in it, I described various issues that the applicant observed with the city's financial advisor's analysis and the but-for test. And before I elaborate on any of those issues, I'd like to point out at least one thing that about the analysis that I happen to agree with, and that is that you should think in terms of ranges of outcomes rather than specific probabilities. The Columbia Capital study that you have has one outcome and one specific probability. So let me give you some more information. First and foremost, we're not convinced that the rental rates that we showed as projected are achievable. They are best case scenario. We provided the city the Novogradac rental rates. These are the professionals who determined what the likely rental rates would be, and based on those rates, what the likely stabilization period would be. And the Novogradac rental rates on an annualized basis are almost $110,000 less per year than the best case numbers that we also provided. But the study you have only uses those best case numbers. If we're looking at a range of probability, it's fair to look at the best case. It's also fair to look at a safe studied rate that Novogradac came up with. Here's another thing. In the IRB application, when the question's asked, how much does this project cost? Because we asked for a sales tax exemption on building materials and construction costs, we added a cost up that was pre-sales tax. Now, if that sales tax exemption is not available, costs of the project go up. It's not a $12.1 or $12.2 million project. It's a $12.5 or $12.6 million project. If you input that into the spreadsheet, it has an impact on the rate of return. There's other issues as well. If you've seen the memos, you'll know that there was a correction made to the vacancy loss and collections losses. We estimate those at 7% per year, and that has an impact on the ultimate rate of return. The study that you have from Columbia Capital makes some assumptions about the interest rates and capitalization rates, which today are at historic lows. 10 years from now, will they still be this low? If you look backwards in time, you'll see that those rates fluctuate over time. And there's a lot of people in the industry, including the applicant, who believes that those rates will go up. And if they do, the cost of capital, the debt service on these loans increase. The loans aren't fixed for 10 years. They'll have to refinance over the term of these 10 years.
Your time is running out.
I'll wrap it up.
Wrap it up, yeah.
So there are some differences, but we believe that the letter that we have given you provides a reasonable and fair range. The cost-benefit analysis makes no attempt to describe the intangible spin-offs in an apartment project. The intangibles and the spin-offs are the project. You do this because the intangible benefits of providing housing is worth it. The cost-benefit analysis doesn't look good. We knew it wouldn't look good. We don't add jobs. And the analysis is designed to tell you how good it is depending on how many jobs you create. But what we're here to tell you is your policy permits you to approve this, even if the cost-benefit analysis is negative, if you are meeting other goals and priorities of the city. The decision is yours to weigh the intangibles and determine whether this project merits your financial support. I'll stand for any questions.
All right, thank you.
Thank you.
Bill Fletcher, 8953 Hillview Drive, DeSoto, Kansas. I've been before you many times. I've raised my family in this town. My children are now raising their family in this town. This benefit district is costing the school district $2.5 million a year. How can you look your daughter, who's a teacher, your grandchildren, that you're not going to pay their money to help support the schools? We spend more money in this community than anybody. trying to make it better. We want to make it better. I'm not against the apartments. I'm against the abatement to hurt the school district. You can do with your money what you want. Well, why should I hurt the children? Our favorite son, where do you live at, favorite son, Lawrence? That's all I got to say. Thank you.
All right.
I live here.
Thank you. Anyone else that wants to speak to the issue? If not, we'll close the public hearing. Any discussion on with the council?
Thank you.
Anything? It'll be in the other line in the agenda anyway.
Correct.
Yeah, okay. Moving on, consent agenda. Items will be acted upon in one motion unless a council member requests an item to be removed for discussion or separate action. So we have the consent agenda, approved minutes of the council meeting of June 16th, and approved pay ordinance number 786. Any discussion on that?
No. I move we approve the consent agenda as submitted.
Okay, we have a motion and a second. Roll call.
Murdock? Yes.
Lane?
Yes.
McDaniel?
Yes.
Walker?
Yes.
Thank you, council. The motion carried.
All right, thank you. Call on public is next. Members of the public are welcome to use this time to comment about any matter relating to the city business not listed on this agenda. The comments that are discussed under call on public may or may not be acted on by the council. A 4-minute time limit, please wait to be recognized. Do I have anybody in the call on public? All right, seeing none, we'll move on. Old business, we don't have any old business. Moving on to 4, new business. 4A is consider resolution of intent for issuance by the city of $12,200,000 industrial revenue bonds and a 10-year 100% property tax abatement for proposed 120-unit apartment complex at 8900 Commerce Drive. You want me,
Again,
Well-
Patrick,
Patrick?
Yes, just briefly, Mayor, I did, on page 2 of the memo I provided in your packet, I indicated to you that, any motion to approve the resolution of intent should include the level of abatement and any other requirements that are not already stated in that section 4, the screening, the landscaping, if there are any other things that you feel are appropriate that you believe should be imposed upon the developer as consideration for any tax abatement. Those are things you should discuss and include as part of your motion. And then outside of that, Jeff White is here. Jeff White is the city financial advisor and had involvement in this project from putting together the initial cost benefit analysis as well as the subsequent analysis. So I think it's appropriate that Jeff be allowed to address
Yeah.
the council.
Yeah, come on up, Jeff.
I did have a couple questions I want to get back to on
So I apologize.
the, sorry.
Mr. Mayor, members of the council, Jeff White with Columbia Capital, it's good to see you all again. I get to do my best Gary Anderson impression tonight as well, which is not a very good one. And I'll simply start by saying the item before you, as Patrick mentioned, would start the process of approval of an IRB transaction, which would ultimately result in an exemption from sales tax on construction materials and labor and/or an ad valorem property tax abatement. So the purpose of the cost benefit analysis, which is in your packet, or the CBA as I'll refer to it sometime, is to satisfy a statutory requirement that a cost benefit analysis be performed when the city considers providing a property tax abatement. The statute requires us to assess the impacts on and to notify affected counties and school districts and to calculate the impact of state revenues. The CBA is one way to measure the public's return on incentive investment in the project over the life of the incentive. one but not certainly the only. We detail in our cover letter the limitations of our analysis. There are two limitations in particular that you should keep in mind. First, we use an average cost approach to determine the impact on new residents of impacted cities and counties. We do this because calculating marginal impact, the cost of an impact of a single new citizen, is both very challenging and it produces lumpy results. As an example, the city can likely serve one new citizen to the community with existing staff and equipment. You likely wouldn't notice. But at some point after adding enough citizens, the city would probably need to purchase a new snowplow, or you name the piece of equipment. Rather than assessing the full cost of that new snowplow to the economic development project that happens to produce the new citizen that pushes the city to have to make that investment, we use the average cost of the existing city government with some adjustments to come up with a cost per figure per new citizen. What that means is, for any given project, we're probably overestimating costs. If you do enough of these over time, it probably works itself out over time. Second, we're assuming that the state will return to a school finance formula that is fundamentally based upon enrollment rather than the block grant formula in place today. You heard the concerns from the school district tonight. Those are right on point. We believe the legislature itself indicates that it intends for the block grant formula to be temporary and transitory until they look at a new system. Our hope is that that new system would continue to be based upon enrollment, so it would recognize increases in enrollment and the impacts on school districts to pay for those new kids. We have heard from districts, and not only this one, that they're concerned with this treatment in our analysis and feel that it overstates the benefits of economic development projects to them. Our cost-benefit analysis, as you heard from the applicant tonight, looks only at first and second generation costs and benefits, those generated by the business itself and any new employees that it creates. We do not calculate third generation benefits or fourth or fifth. To provide a concrete example, if a new company creates 3 new jobs in town, we calculate benefits provided both by the new company and the assumed additional housing and retail demands of those 3 new employees. We don't go further, however, to assume that at some point enough new employees will likely create new job demand at McDonald's, local gas stations, and those kinds of things. Those impacts certainly exist, but we'd ask you to keep in mind that when we're not calculating those benefits, we're not calculating their costs either. Certainly, just like any sort of growth, first or second generation, if you have additional growth in the community, there will be additional costs, not only to the city government, but the county and the school district. And it's not necessarily reasonable to assume that those spin-off benefits will be net positive to the city, the county, or the school district. Finally, for this particular project, we produced a cost-benefit analysis on the project itself and then on the quote-unquote product. And I use the term product, nothing else really fits. But in this particular case, we're talking about 120 new households in DeSoto. The project itself produces primarily new property taxes, which are assumed to be abated for the full 10-year period. For the city, the project also produces some new franchise fee revenue. That's not shared by the county or the school district. They don't levy those. As you can see from our analysis, the project itself is more or less cost neutral for the county and the school district, and it produces a small net benefit for the city. We see a very different story when we evaluate the product of the project on the community. With 250 plus new residents, the model forecasts a significant demand on city, county, and school district services. As a result, we see significant net cost for all 3 entities in the cost-benefit analysis. This finding is consistent with our work in other communities. For a study we co-authored for the city of Kansas City, Missouri, our partner produced an econometric model that showed that incentivized residential projects in Kansas City generally produced negative net benefits for the city. Our resulting recommendation was that the city focus residential development incentives on high priority policy targets such as affordable housing or redevelopment in economically depressed neighborhoods. The statute does not require a positive outcome on the cost-benefit analysis. It only requires that it be performed. And we ask that you consider analyses like this one as just one data point in your determination of whether or not an incentive should be granted to any given project. The purpose of the cost-benefit analysis is not to answer the question how much incentive is warranted. To answer that question, we need to evaluate a different set of assumptions. So City asks that we supplement our regular cost-benefit work with an analysis attempting to answer the question of how much incentive is the right level of incentive for this project, and I should use right in air quotes. To do so, we requested an operating pro forma from the developer to round out our understanding of the project's construction, startup, and operating costs. The developer did provide these data to us. We provided the developer with the first draft of our analysis and incorporated some of their feedback into the analysis into our packets. Using those data and some important assumptions driven by market conditions, we evaluated hypothetical rates of return. First, the rate of return on the project itself, and second, the rate of return on the developer's equity investment in the project. The project rate of return uses industry standard methodology to calculate a rate of return using the projected net operating income from the project over a 10-year period, and then assumes the developer sells the asset at the end of that 10 years. Using this methodology allows us to compare the pro forma rate of return for this investment against actual rates of return being demanded in the market on sales of apartment properties over the last year. Our research indicates that Class A apartments, the nicest ones that you can think of in the KC Metro, produced a project rate of return of 5.5% last year. And you heard the applicant's representative mention that these rates are very, very low, and they are. This project is not designed to be Class A, and it's on the edge of the Kansas City metropolitan area. As a result, we've assumed a 7% rate of return is warranted, 27% higher than the rate of return demanded on Class A projects. The developer rate of return starts with the project's net operating income and then reduces that by anticipated capital expenditures and debt service costs to produce a net cash flow to the developer. We can use this cash flow stream to evaluate what the developer's expected rate of return on equity might be from the project. While there's no benchmark target return, we can think about a developer's alternative investments in this interest rate environment. So a 10-year risk-free rate of return today would yield slightly less, than 1.4%, 1.38 to be exact. Over the last decade, an investment in blue chip stocks with dividends reinvested would have returned about 7.5% to the investor. I think most folks would agree that investing in an apartment complex is riskier than either of these. I certainly would. But how much more risky? It's hard to know, but very few asset classes have generated a 10% rate of return over the last decade. We're suggesting that a 10 to 12% return on equity is likely a reasonable range for a project like this, with the lower end of the target being more appropriate for an incentivized project because of the additional certainty that incentive provides. To summarize, to meet the but-for test required in the city's economic development policy, the unincentivized rates of return and/or developer returns should be less than market ranges, and the incentivized rates of return should be at or near market ranges. Incentivized returns below the market range call into question the viability of the project. If the developer cannot produce a market rate of return on its equity, will it skimp on maintenance? Will it reduce capital expenditures? Will it take risks in the composition of its capital stack? Ultimately, the city does not want to make a public investment through incentives in a project that's not viable. I think it's important to point out that the public will be the largest equity holder in this project if the incentive package is granted that they request. On the other hand, incentivized returns above the market rate produce an unearned windfall to the developer. If the point of an incentive is to encourage a project to locate in an area it otherwise wouldn't in the free market, then the city's goal is to deliver an incentive package that has about $1 more of incentives than is necessary to achieve this goal. Practically, that's an impossible task. But outsized rates of return are an indication that the incentive package is too generous and should be scaled back. Keep in mind that both our analysis and the competing analysis you heard about from the developer rely almost solely on assumptions that won't be tested for 12 or 18 or 24 months or longer. Because of this, we do think it's reasonable to use assumption that makes sense in today's environment at the time of the incentives request, and that don't assume the world will be markedly different by the end of the analysis term. With all that in mind, our conclusion is that the council needs to be very cautious in considering incentives for this project, given that the project rate of return and developer rate of return on equity are, in our view, already close to market norms. Assuming dramatically lower unincentivized rates of return brings to rise a question of whether, even incentivized, the project is feasible and likely to be successful over time. From a best practices standpoint, we'd suggest the following. Use incentives to achieve the public policy goals of the council. Use incentives to assist projects that are likely to be successful with those incentives. Use incentives sparingly to avoid providing publicly funded windfall to private parties. Require ongoing accountability by periodically reviewing whether the ongoing incentives grant remains necessary and appropriately sized, and whether the project continues to achieve important public policy goals. With that, Mr. Mayor, I'd be happy to try and answer any questions.
Any questions for Jeff? Fine. No. No questions?
The cap rate that you assumed is 7% is, I mean, I'm not a apartment expert, but I just, in doing my research, I just looked at like the past 4 years, actually it's like since 2012. And it seems like that rate has varied from maybe almost 9 down to 7 now, or the 5.5 for the Class A's. Do you think it's reasonable to assume that it's, I mean, that we're not in some I mean, we seem to be, as an area, underserved with apartments, so that investment is going to be more valuable in this particular slice of the market than it might be in 5 years or 10 years, or it was 5 or 10 years ago. Wouldn't a better approach be to look at some sort of averaged, or if we're looking at inflation at 2%, then that cap rate is gonna, you know, those interest rates are growing, so this cap rate, capitalization rate is gonna grow as well.
Yeah, it's a great question. So undoubtedly, Kansas City has one of the hottest multifamily markets in the country right now. Without a doubt, if you really read any trade publication, you'll see that that's the case. Very hot market. But this is the market in which the developer is making that investment. And if you are making an investment today in an apartment project versus an S&P 500 index fund, then you're going to be expecting to produce some sort of incremental rate of return above what that S&P rate of return might be. Is it reasonable to assume a more favorable set of assumptions going into the project and a less favorable set of assumptions going out? Certainly, but you could also make the argument that the Kansas City market could still be hot in 10 years too. I think the reality is we won't know for 10 years who's right and who's wrong. In my mind, it makes sense to use a consistent set of assumptions, both for the entry of the project and the exit of the project. But certainly, if you play around, you can see in the numbers that the developer provided in the letter today. If you change that cap rate assumption, it makes a material difference on the rate of return analysis.
Well, I guess, you know, we do have a hot market right now, and I think since, in the past 3 years, there have been 6,000 multifamily units permitted in the metropolitan area. And that's market rate, that's not senior living, or that's a similar type, you know, and we haven't seen any applications for a project here in town. So I don't know that, you know, so I think the argument that we're in a slightly different market than maybe than the metropolitan area, it has some weight then.
And I think we've tried to compensate for that by looking at a higher cap rate in our analysis than what I would use in Lenexa, pick any place along the 435 corner rate.
Well, I think it's pretty obvious that we need apartments, but no doubt about that. I guess it comes down to the discussion about abatements or incentives and what it takes or what we're willing to do. And like you say, those market valuations you made and comparing with the rest of the city, who knows what it's going to be from this time next year. We've invested a lot in getting the grocery store in, including having to raise railroad tracks. And
looks nice, by the way.
Yeah, super nice.
Yeah.
Costs a lot of money to do that, and we spend a lot of money. And we didn't do that with the hopes of not having business come in or something about it. We've heard from all the
the businesses along there that they need employees. We've known that for years. They've done different reports on that, and you gotta have some place for them to live, and we got some fairly good housing in DeSoto. If you wanna buy a brand new house, or once somebody's moving and they go quick. But as far as rental property, we're almost non-existent, available for new people coming in. So I think it's pretty important for us to consider this project, no matter what the numbers are.
Yeah.
Ron?
You know, I've sat here tonight, I've heard some comments on the plus and minus, and the first thing that comes to my mind is that piece of property out there, been there for 30 years, and we've been held captive to that property out there. And now we have someone, first person to come to this town with $14 million and wants to spend it in our little DeSoto town, a little country town. We did 2 years ago, we did a survey. We need apartments. We need places for people to live. Our big businesses that are here, that we gave tax abatements when they first came here, they're standing up and telling us now that we need apartments. They need people employees, and they can't keep it employees. One of the businesses I know pays $15 to $17 an hour, which is not a bad wage, but if that person has to drive somewhere, that's probably not good for him. You talk about the positives for this project. The positives are we're going to get people to help support our retail businesses in this town. We're getting a new grocery store that this group, we've laid it out on the line to get a grocery store, which this town so desperately needed. And we felt like that when we did that, it was going to make this town grow and going to bring people here. One of the positives about the people there, plus the people, is they're going to buy a lot of water from us. We spend a lot of money on our water system that the federal government gave us. I pushed for that, and together we've got $6 million worth of debt on water, but we've got a lot of water. So they're going to use a lot of water. Also, we've got a $6 million sewer plant that we have to pay for. Only a third of the people in this town use that sewer plant. This project's going to use that sewer. And so that's another positive to it. And as people come here and it grows, they're going to support our retail businesses. And God only knows we need more retail business in this town. We don't have enough places for people to go to. And hopefully we're going to get some other things around the corner there. So to me, it's a plus, plus, plus. Yes, there are some minuses. We're not going to get any taxes for whatever this group decides we're going to do. But we're going to bring people here, and we're going to make our future growth bigger and better. We absolutely need these apartments. That's all I got to say.
Danny?
Well, I have a hard time with the numbers down. I feel that we do need the apartments. I'm having a hard time with some numbers that I think we need to discuss. We've known that we need these, and we were looking for them coming, and it's finally a chance here to get those. But I don't feel comfortable with the 100%, and I'll put that right out front. And but I do feel strongly that we do need these apartments. But I don't think that that's probably the right way to put the city in the position with this 100%. So I've said that, and I'll let it stand it there, because I think we need to do some number crunching. I do feel that there is some zoning issues I feel that we need to address later. I know that Patrick said bring up at the time how you feel about these other things as far as the berms and the landscaping for the people that are going to have to look through this behind their property. I'm very concerned about that too. And there's a lot of things we need to issue there. We need to probably hear some more from Mr. Hicks, and
you know, but I do feel strongly that we do need these apartments for some of the same reasons that Ron suggested, that it is gonna help with people in this town. I don't think it's gonna help.
Before, I want to go back to I had a couple of questions about the first document that we will be approving, which is the resolution.
Correct, resolution of intent.
Now, in the Harps, I know it was a different deal, but we did a pilot agreement and a developer agreement. Will we not have those documents to accompany this as well?
We will, and I had prepared a pilot agreement and sent it to the developer, and it was their desire to not take that up at this point in
Right.
time.
But I mean, like, so I guess more to my point there, question, and that Article 4 where we're starting to discuss the berms and the landscaping, wouldn't those typically be identified or described in a pilot agreement and a development agreement? Is that?
They would be in the pilot agreement. You know, I guess I would pose a question to develop. I believe they would like to know generally what things you're thinking of, and I myself, just from a staff perspective, thought it was appropriate as part of consideration of giving the tax abatement. There may be particular things, not detailed, but just general things that you would want to direct staff to include in that pilot agreement, so it's not any surprise to the developer. These are things over and above what the city's general zoning requirements would require. I mean, there are still processes that we will follow, site plan, things of that nature, but it's completely appropriate if there are things over and above that you wanted to impose as part of you giving this tax abatement. Those things can be imposed.
Okay, so that would bring me down to my point. That's what I saw as one of the positives of going through this way, is that the pilot agreement and through this process, we're able to have some say in the type of project that is brought forth. It's not, we're not completely at, the applicant's doesn't have a free hand to bring whatever project forward if we have some preferences that we would like to include in that development agreement, or just assurances that the final product will match the renderings that are presented in the initial discussions, so that there are no surprises later on. Like what I did was I just made like just a simple spreadsheet paper that said pluses and minuses, and I have a lot of pluses. I have a couple of minuses. One was the cost of services that are not being reimbursed for the particularly schools and our fire and police. But the pluses are we have a lot of needs that we need housing for. Through this process, we were able to control the quality of the project, or have some say in the quality of the project. There's times, it seems like to me in this city, you got to do something you got to kick something in the seat of the pants, or do something to jumpstart. You know, we've been struggling in Commerce Park for a long time to get stuff going, and nothing's happened. And I think in the residential market, in all areas, we're in such we have such low inventory in all areas of our housing that it's got to be a priority. And I think this is one way to start that process, to start to build up our housing stock in the city. It's the first place someone might move when they come to town and get their job, and then we have to have that next spot for them to move into. But we got to have the place where they can come first, and that's the role that these apartments would fill. I don't think my understanding is the project is not going to go forward without an incentive, some level. I mean, the projections or the performers that the development group has put together based on their numbers, you know, it just doesn't, it wouldn't make sense to invest money in DeSoto without some incentive. And I would tend to agree with that to a certain extent, because we haven't, if the market is so good right now, I think we would see other interest in coming to the city. If the as good as the multifamily market is, and as much demand as we have here, if it was feasible for a private development group to come here without incentives, we would already be seeing applications. So I think we've got to consider that. I mentioned earlier, I was just looking to see how many multifamily permits have been issued in the last 3 years, and I was trying to get Johnson County. I didn't have time to refine it that much, but the metro area is 6,000, and we haven't seen any. So I think we need to take a step to get some here. I think I've rambled long enough.
I don't know that I have anything different to add. I do, you know, restating that we need housing, you know, it's not really necessary. We've all said that, and it's, we have that through studies. We know that's the case. Looking at the information, at first that we had received from Columbia Capital, when we're looking at an abatement, we're kind of like, okay, now we look at the numbers that the developer themselves gives us, you know, they're a little bit different. And like Rick said, you know, there's got to be some return on their money or it's not going to work. We don't want a development that's going to fail. And so I think we need to do what we can to help make it work. And again, I think reemphasizing what Rick said is really a good point, that by doing it this way with some sort of abatement, we do have a little bit more control over what does get accomplished in there. And I think that is really a positive for the community and for the concerns of what some of the citizens have as to what type of housing, you know, apartment complex this will be. So I think what we've got to come to terms with is, you know, what that percentage of abatement is and what kind of things that we do want in there. And I think these are decisions that we're being asked to make tonight, if I'm not mistaken. So, you know, I think at some point somebody's going to have to try to, you know,
I guess I have
throw out some numbers.
I have one question for Travis and or whoever that, about the abatement. Since we're talking about what kind of abatement, whether we can do stair step or whatever, but I've heard that your abatement is, you need 100% all of it, or you can't do it. Now, is that correct, or can we talk 30? Put you on the spot, but we're sitting up here asking about abatement. No use us wasting our time talking about abatements and doing a stair step or anything else if it won't work. Kind of have to have some kind of idea of where you're at.
Before that, the last abatement we did was with Custom Foods.
Yeah.
And we did 3 years of 100%, and we stair-stepped it down to 50%. And these guys aren't bringing in any employees, but they're going to bring lots of people. So, you know, and I'm going to say what I think. Is that okay?
Sure. What we want. That's what we want.
I think that we need to do 5 years of 100% and then stair-step it from there down to 50%. And also, in the pilot agreement, I think it used to be that after 3 years, what I read here, after 3 years, then we need to sit down with them and review where they're at on profits and so forth, and that gets us a little more say-so into it. And in the pilot agreement is what it's all about. And once we do that, and he writes it up, that's what it is. But if at the end of 3 years that they're on project to make money, and maybe we can change what we're giving them. What it is to help them get started. And the first 3 years is going to be tough. It is for any business.
I don't have any problems at all loading up the front end, but as far as according to the long run, that's what I kind of want to get a rough idea if there's any consideration that we can do on that, or are you just at that point?
I'll speak to that now. Travis Hicks, I'm the owner of Hike Properties, with my partner Mark Kern here as well. The applicant, K10 Place, was also representing the tax IRD application with another couple partners who happens to be also the builder of the project, who is not present at this time. We have run our numbers based upon 100%. I came to the council in May and was asked the question, what will it take? And replied back 100% and was given what I had interpreted at that time, the go-ahead to proceed along those terms. We've engaged our attorney, obviously architects, engineers, and we're pushing forward based upon those terms. Our investors, our builder, who we've asked to be a part of this project, is also operating upon that assumption. What could there be that would work for the project? It's hard for me to sit here on the spot and say something less would work. Could there be something less? I'm not saying that something less wouldn't work, but at this point, 100% is what we've done our analysis on, and if it's less, I would say make the proposal, and we can determine whether that would be something that will work for us.
Okay. Anybody? Talk on it?
Just, Travis, if I could just clarify one, by statute, the council can't make any decision on a tax abatement until the cost benefit analysis in a public hearing. So, and you're correct, you came and presented the project and there were questions asked.
I understand
but
that, correct.
There wasn't any decision on that.
Okay, well, that's what I wanted to hear.
Any further questions?
Anybody else? Okay,
Thank you.
thanks, Trevor.
I like Ron's suggestion, 5 years and
It goes to 90 and 80 and 60, and so more or less it's almost a 10-year at 100%.
Right.
But, I just feel like that in our pilot agreement, we need to have some kind of stipulation that we can review with them at the end of 3 years. I'm not saying we take it away from them. but
No,
just
it's-
we
and-
need to review it, like you said, we need to have a little control of what's going on.
I guess it also could provide an assurance to the, I don't know if it could or not, that if it's not where they're hoping it is at the end of 3 years, that 5 might be extended to 6 or
That's
whatever.
what I'm thinking.
That start of the step might be adjusted to performance. I don't know if there's a way to do that or not.
So what we're considering is a resolution of intent, and that 100% tax abatement that's in that statement is just for reference?
Yeah, well, technically speaking, as we, once you grant the abatement, it's 100%. The Kansas Board of Tax Appeals will take that up to 100%, but the pilot is how you pull back on that. So we can, each year, set forth in the pilot, it could be a different percentage, or the look-in process that you were mentioning, that can also be done. It just will need to be set out clearly in the pilot agreement that that's something that is required.
Okay.
So you're saying that we need to approve the agenda for just, say, the first year and not do, and say that the other 5 years, we take that up in the pilot agreement and put the numbers in there as such, so we just vote on whether or not we're gonna give 100% the first year? Is that what you're saying?
Well, because the issuance of the industrial revenue bonds, different than sort of like custom foods tax abatement, which was by ordinance, it was a constitutional abatement. This abatement is by virtue of the industrial revenue bonds being issued. So it's not only the sales tax exemption, but the ordinance that authorizes the bonds to be issued, that will address the tax abatement. So,
Well, the industrial revenue jobs are separate from the tax abatement.
well, no, it's all tied together. So you, different than like custom foods, you won't have an ordinance just solely on a tax abatement come before you at a later time. You will simply have all the documents for the industrial revenue bonds, which will have within it provisions giving the tax abatement. So because of that, bond counsel, for one, wants to know, generally what is the abatement going to be, understanding that a pilot will come before you at a later time with those specific numbers. So this resolution of intent is sort of the big picture message to not only the developer, but to staff on what you're comfortable with.
But the table that was included in this would be filled out as we would anticipate it being.
Correct.
With 100% for the first 5 years and then stepping down.
Right.
All right. Do we have any other discussion on that, or someone wanted? 100% for the first 5 years.
What the notes I took, it would be, as far as the abatement, meaning what you do is the number of taxes that would have been paid, but without the abatement. So you're essentially saying that you're gonna, for the first 5 years, let's say they would have had to pay, $1,000 a year. We know it's gonna be a lot more than that, but for the first 5 years, they would not be required to pay any of that $1,000.
So those would actually be 0, 0, 0, and then 10, 20, 30, 40.
Right, exactly. Yeah. Since this is a resolution, though, as long as we have clear direction, unlike an ordinance, we don't have to have it in writing in front of us. So I get what, you guys are, the direction you're giving, but, come year 6, then out of that $1,000, they would have to pay 10% of that $1,000. And then in year 7, they would have to pay $2,000 or $200. So that would be the way it would work. Now this look-in thing that's been talked about, obviously that could change everything and that would be set out in the pilot agreement, a methodology of, what submittals would be required of the developer and, maybe there are parameters as to, those percentages could fluctuate depending on the information provided. That's something we would just have to try to flush out in the pilot agreement.
To me, that puts in there where it protects them and it protects us. If we have that incentive, and if they would agree with that. And so, if we're not doing good, then we can bump it up. That's.
Question?
Thank you, Mayor. I appreciate having the opportunity to hear this conversation. I do think you probably want to hear some feedback from us about it as well. If you're talking about tapering down percentages in the pilot, that's something that we can look at. The biggest concern from what we're hearing is this look-in period. Consider it from our perspective. The last 5 business days have been really helpful in terms of this dueling spreadsheets things we've had with the city's financial advisor. And you can see we don't agree on the numbers now. How do we classify it in an objective way 5 years from now, whether the percentage can go down or up? How do we convince a lender to make a loan when there's really no certainty after X number of years that you will allow the abatement to continue? We didn't request 100% because we didn't think we needed it. We do. So I want to just caution you that any look-in or reconsideration of the percentages, I would A, have a hard time recommending that the developer accept those, and B, I think they'd be extraordinarily difficult to negotiate, and C, they'd be very difficult to get a loan on, especially beyond that term. So that's the feedback I wanted to provide.
Okay.
Thank you.
So we could still do the resolution of intent, the way it's written, and work the pilot agreement out at a later time, right? I wanna make sure.
Correct.
Yeah.
But, I mean, I suppose we could, you know, push that down the road as to whether there's gonna be a look-in part of this, but
Better to have the numbers in up front.
I think it'd just be better to, if that's something that everybody or a majority of you think should be required of the developer, then I think it's fair, you know, we would put that in this section 4. If you look at the section 4 on page 2, you know, there's these things that the pilot will include provisions relating to, and then there are 5 items listed in here. And, you know, if you're interested in certain submittals by the developer that could adjust the level of abatement, I think that would be something we would add to that list. Or not, you know, it's just up to what is the consensus on that issue.
Well, it seems like when that was first started talking about, when Ron first mentioned that, and maybe I was wrong, he was trying to make sure that the step down was needed by them. And not the other way around. Does that make sense? That it was more of a matter of whether, and not the other way around, but for us to give it to them and then come back and say, oh, you guys are making more money now, we're gonna take it away. You know, I don't know if that, you know,
No,
that.
what I was trying to
you
do,
were-
make it so they're protected.
So that, yeah,
'Cause
so I
know
think
they're
that
gonna
was
get a
what,
loan, and
you
I
know,
don't know what that is, but
yeah. But, you know, I agree though, that numbers are gonna be really hard to look
Yeah.
at. I mean, I just don't, I mean, you know, anybody can project and say and show and make things look the way they want when it comes to some of these numbers, and I think that makes it a little bit hard to, you know, add something in like that unless we really have a good, you know, example of where this has worked and, you know, done, and this is kind of a different situation, you know, we're not dealing with, you know, the grocery stores and you can look at the state and see how many dollars worth of sales or something, you know, there's a lot of factors that are gonna be pulled into this. And, but I think when it started, it wasn't an intent to take away the abatement, but to possibly increase it if needed be.
May I?
Yeah.
Thank you. Just to put it in perspective, the next item on the agenda is a zoning decision that if you approve it, makes the zoning final. If there's a look back in the pilot based on your motion, we would likely ask that you defer that zoning decision until we resolve the question. If the decision is for the percentages we've discussed, with 5 years at 100, 90, 80, 70, 60, 60, is that right? 60, 50, stepping down, then we would proceed with the zoning.
Couldn't you, just on this question of the look back, I suppose you could also tie it to one of the, like the cap, or an inflation number where it would be, it wouldn't be based on numbers you submit or numbers, but rather it would be tied to some, you know, we do that in many of our contracts, like the trash contract. If fuel prices go up by a certain percentage based on a industry marker, then they get additional revenue to cover that. So just throwing it out for discussion, I think that would be another way of perhaps getting at the same thing rather than relying on, you know, numbers submitted by the developer, would be to tie it to some, and I don't know what that would be, but maybe the cap rate that was talked about earlier, that you are pretty certain is going to move in a different direction than Jeff White projected, or some other number.
If there's any chance that the numbers change, we'll ask the zoning be deferred.
Okay.
Thank you.
Well, we got some numbers, is that what we're gonna go with? Anybody wanna talk about that?
Yeah, I'd like some more input from you guys. That's
Well,
what I've been thinking about for 3 days. We need to do something. We can't let this slip by us. We have somebody with $12 million that's to spend it in the southern island, and recently had $12 million other than the grocery store people. And it's been us spending the money.
Anybody wanna make an attempt at it, at a resolution?
Is there anything else that needs to be discussed in that?
Well, it's whether or not we want to put this look in the section 4, right? I mean,
Right, and then
what
these 5 items too that are in here, you can make a motion to adopt the resolution as written, plus, if there's anything else, and then also indicate the abatement percentages. These 5 items, they've been communicated to the developer. They don't, as far as I know, they don't have any problem with the 5 that are in here, so it is this look-in item that's new, right?
Can I ask just a question to Patrick, and maybe it's up to Jeff? If we do include these numbers, the step-down numbers we're talking about, or maybe a look-in provision, in the resolution, how set is that when it comes back in terms of the pilot agreement? Can those not change at all? Are those completely binding based on this resolution?
Technically, they're, not like binding by law, but again, I know from bond counsel's perspective and the developer's perspective, the idea is that whatever is arrived at here, that's what the project would get moving forward.
Well. Rick? Wanna make an attempt at it?
I don't know, are you good without the look-in, or are you, I mean,
I don't care. Do you wanna make it more?
no, I'm think this is a reasonable start. Let's,
Pretty close to gives it the 10 years. I mean,
Yeah.
the 90% and the 80%, and that gives 3 years where they're under that. Here's what I want. I want, for 20 years from now, I want the apartments to look just like that. I've seen their apartments in Lawrence, and that's what they look like, and I don't know how long they've had them, but they're still pretty dang nice.
Yeah.
And that's what I'm after, is that right for them? And, they gotta be making money to keep them like that.
I think just to clarify on the look-in, if that's gonna be out of the equation, I think it goes both ways. The city won't be looking in to see if you get more abatement, it's just, these numbers are what would be the abatement for the full 10 years.
I make a motion, we approve the resolution as presented, and they put the abatement at, the schedule discussed, going from 100% for the first 5 years, 50 beginning, and then declining from 90, 80, 70, 60, 50.
That's resolution number 968. Councilman Walker, would you repeat the?
I move we approve the resolution as submitted, resolution 968, and put the abatement schedule at 100% for the first 5 years, stepping down from 100 to 50% in the last 5 years.
Or the last, step down, so at the last year it's at 50%, correct? Yep, got it.
Got that, Brandon? I guess, do we have a second on that?
I'll second that.
Good Valentine. Okay, oh, okay. Roll call.
Murdock,
Yes.
Lane,
Yes.
McDaniel,
Yes.
Walker,
Yes.
thank you, council. Motion carried.
All right. Moving on to item 4B. Consider ordinance for rezoning request from M1 to R3 for 6.89 acre parcel along Palmer's Drive. Thank you, Jeff.
Take care.
I would like to see item 4B taken off, and I'll give you my reasons, and sent back to the planning commission to be request a rezoning or new zoning. R3 isn't appropriate for what we're looking at here from M1. The reason why, I'll give you, you're looking at, we're talking about apartments here, and that's all we're talking about. We're not talking about duplexes, we're not talking about triplexes, we're not talking about single-family dwellings. We're talking apartments, and that's what I want to be sent back to the planning commission. They do not have a zoning just for apartments, and every other city does. This city does not. We have thrown in other things in that R3, and just to be on the safe side and to know what's actually happening when we zone something for apartments, that was what we see there. We don't want to see a sidestep. We don't want to see, well, that was a good idea at the time, but we got a problem now, and we don't want to see it zoned for something different. So it's my recommendation that it be sent back to the planning commission for zoning for an apartment complex only.
That would require then a new zoning class to be established?
Yeah, it's under that context, our zoning regulations and many others are like this. R3 does allow apartments up to 18 units per acre. It also allows duplex and single family. Many zoning districts allow lesser uses. Say the existing M1 allows agricultural uses, issues like that. So in order for the planning commission to take that direction, they would have to initiate a text, well, one of two things. We do have a planned development district where the applicant's plan could become the zoning. But really, that's set up, the intent of that district is to allow for mixed-use developments that are unique in nature and otherwise wouldn't be really capable of developing under a traditional zoning site plan arrangement. So, yeah, it would require a text amendment that just carves out a particular zoning district just for apartments under that scenario.
Well, based on what I've heard from them, anything lesser density they probably wouldn't be able to afford to do that at all anyway. So,
yeah, I think the nature of the typical zoning process is that the zoning defines what the landowner is legally allowed to do. That is his zoning, that is his land right. So once a property is zoned, as it is now within one, he's legally allowed to do whatever that zoning district permits. The tricky part, and part of this pilot agreement discussion, is that in DeSoto's regulations, the planning commission is really the ones that hold the key to the particular development standards. The planning commission reviews the site plan, so they're gonna look at those pictures, they'll look at the parking lot layout, they'll look at every little detail, every aspect of what they're proposing to do, and the planning commission's job is to either make a determination that it meets the regulations and it's allowed, or it doesn't meet the regulations and it's not allowed. That decision doesn't come forward to the council, because it's not a land right decision. It's just it's a kind of a mechanical yes or no, pass fail sort of decision. That's the role of the planning commission. That's not like zoning. You know, zoning is the policy, it's kind of a policy decision on what type of land use it feels appropriate. And in this case, there's an obvious opinion that zoning classification is too broad for one person's comfort level. And so we can definitely have that discussion with the planning commission, but the planning commission could take that direction, send back the same recommendation on this issue, but they would have an obligation within a period of time, I believe it's 30 days, to either send back the same recommendation on this particular issue or a different recommendation If they do not, then it does come back to the city council regardless of, is that right? And then you can make a decision on the issue.
Wonder, would the applicant be opposed to amending the resolution we just passed to say that if the rezoning is approved, that no other you would not transfer title of that property to anybody else, and the only project you would do would be these apartments, and if you didn't do that, then you would not object to it being rezoned to what it was, or to the existing zoning? I think that would address the issue of.
I had a little different thought along that line. It probably isn't kosher or copacetic, but couldn't the rezoning approval be conditioned upon the approval of the pilot agreement? Like the rezoning would not take effect until we had a pilot agreement in place. If we don't ever reach a pilot agreement that defines what's going to be developed on that property, then the rezoning never is enacted.
Yeah, we could make the rezoning ordinance effective, effective after the pilot agreement is finally approved and agreed to.
You okay with that, Danny?
Yeah, I'm just not comfortable.
You just want comfort level.
My comfort level is not comfortable with that. I wanna keep my guard up for the city, and I'm just not comfortable with that something could happen. And this ensures that we have some stability, and that's all.
Well, this protects them as well as us. If the pilot, if this thing falls apart, then it just stays zoned M1, and that's what everybody, if the project doesn't go forward, that's what everybody, I think, would prefer.
Yeah.
And if we do get the pilot agreement, then the rezoning is kicked in, and we're on to the next step.
If the staff is okay with making that addition to the zoning ordinance such that it's conditioned on approval of the pilot agreement, it's not dissimilar from something we suggested at Planning Commission related to the approval of the site plan. It works the same way. They're a bit synonymous. There was a concern at the Planning Commission. Commissioner Garrett said it bothered him that we're giving them a blank check to build whatever they want. He doesn't like writing blank checks for whatever. He wants some assurance about what's going to happen, and we're fine giving that assurance. This is why we're here. This is why we ask for an abatement. This is what we want to do. I understand that if you approve a residential zoning district, there are other permitted uses. So I think that's fine with us.
Yeah, I think that's a good idea.
I would just ask, if you don't mind, I agree that would be the easiest and most straightforward, but thinking about it, I'm wondering, landowners have appeal rights on, they have a 30-day period. So if you don't mind, I would like the alternative, that what you suggested, but in the event that, and I'll certainly confer with Matt about this, but if we feel like that's not legally possible, then they would agree to, as part of this resolution of intent, that
We would
hands
come
are
up with a
tied.
revised, updated resolution of intent that would describe it in that way.
Yeah.
To the same result.
Right.
Okay.
Anybody else? Yeah. Go for it, Rick.
Well, do we need to talk about the zoning?
Yeah, I think this is more, sort of aside, but still the council, you need to talk about the request for the zoning change. The Kansas Supreme Court issued a case referred to as a golden criterion. The Kansas Supreme Court has said that both the Planning Commission and the City Council, in deciding a rezoning, must take into consideration those criteria. And I know Mike's included those criteria in his report, and in the ordinance I prepared, those are also recited in there.
I'd like to take a 5-minute break, either do it without me or whatever. We have any problems with a 5-minute break?
I'll make a motion to take a 5-minute break.
I'll second that.
All in favor, say aye.
Aye.
Thank you very much.
Thanks, Lana, for going that over that way.
We need a motion, we just start up again.
Need a motion?
Generally, you have a motion to reconvene.
Well, let's reconvene, I move we reconvene.
All in favor of aye? Okay, here we go. Item. Oh, yeah, we're still on item four A.
Item 4B, Patrick reminded us that the council is to consider these matters to be considered based on the Supreme Court case in Kansas. The city's regulations mirror the state statute on the issue. The process is that the rezoning application is made, a public hearing is held at the planning commission meeting, and then the planning commission considers the item, the merits of the item, and makes a recommendation to the city council for final action in the form of an ordinance. That was done last month. The planning commission held a public hearing on June 21st. The request is rezone from light industrial, which is M1 in our regulations, to multifamily, which is designated as R3. After the public hearing, we did have several members, members of the public show up in opposition to the rezoning. The applicant was there, obviously, in favor of the rezoning. The staff report that was given to the planning commission is included in your packet as Exhibit A, and it really is kind of a technical analysis from a city planning type review of the merits of each of the Golden Case factors. I'm not going to go through all those. The majority were positive in favor of granting the rezoning. For the overall kind of theme of the analysis was that R3 is essentially a downzoning from M1. So that the types of uses that are allowed in R3, the multifamily or even the two-family or single-family, tend to be less intense from a surrounding property impact on utilities, impact on property values, just any sort of negative impacts. The uses allowed in R3 tend to be less than those that are allowed in M1. Another major factor in that analysis was the comprehensive plan of the city. We have a future land use map, and I pulled it up here on the screen. Essentially, the future land use map and the comprehensive plan designates the types of land uses in certain areas of the city that we see in a 20 or 40-year time frame. It's really kind of the most recognizable part of the comprehensive plan. And in this case, the subject property is designated as mixed use, which in the language that defines mixed use includes higher density residential uses. So that would be consistent with an R3 zoning. So the staff report was positive in favor of rezoning to R3. The planning commission, after hearing public input from neighbors and the applicant, did struggle with the decision. I think in general, their struggles related to negative impact on surrounding property owners and establishing the surrounding property owners' rights with regard to what the zoning and uses could be on the property. There were concerns with increased crime rates in the area and buffering between the low density residential uses on Orchard Drive specifically. So the planning commission first made a recommendation to approve the rezoning, that failed, and then later made a recommendation to deny, and it passed on a 3-2 vote. So the issue now comes to you. You can choose to accept the planning commission's recommendation and deny the rezoning. Patrick has prepared 2 ordinances, both are attached to the staff report. Exhibit D, the ordinance would approve the planning commission's recommendation and deny the rezoning. Exhibit E would go against the planning commission recommendation and approve the rezoning. If you're inclined to approve the rezoning, you would have to do that by a supermajority vote. In this case, the mayor votes, and the entire governing body, regardless of the vacancy, counts in terms of that. So it would require 4 yes votes to overturn the recommendation. So with that, I'll leave it up to you. Answer any questions questions you might have about particulars of the analysis. That's all there.
What was their main reason for changing their mind from yes to no?
Well, they didn't change their mind. The initial motion to approve had 2 yes votes, 2 abstentions, and 1 no vote.
Oh, okay.
Yeah. So then there was, so it didn't fail. It basically just didn't proceed because they didn't have enough yes votes.
I did notice an anomaly in the minutes for that. I think it listed Linda Lane as voting yes.
And I corrected it.
Oh, okay.
She was absent.
No.
Yeah.
And then she was absent in the next vote.
Right.
All right.
I don't remember Linda being there.
Yeah.
No, she wasn't.
That's why when I read the first time, it was a 3-2 vote. I said, well, how did that?
See, that's what happens when the draft minutes get sent out.
Yeah.
Yes, those are, and the ones in your packet are draft. They're
Yeah.
draft until
They
the
are
next one.
draft until they're approved, so. My apology.
That's it.
Any questions from the council?
I don't have any questions, but I think that, you know, when we're looking at something like this and things are either neutral or positive, it's a little hard to not grant such a,
Yeah. When you see so many
you
positives.
know, and, you know, one thing that I think about with this project, a lot of people will say, you know, what we've heard is the negatives, it's not a good place for an apartment complex, and I just think of what is happening all over the metro area where apartments are going in so people can live, work, and play all in the same place. And, you know, this is kind of the same situation. The people that are gonna live there can walk to work, they can, you know, some of them hopefully, you know, it's a,
You see that all over the place.
you're starting to see it in so many places where it's
Yeah.
mixed use that I think that that's not a real good reason not to approve something like this.
I heard that from my wife about mixing that, whether or not they should be there or not. I said, well, just go down the road. The
Down the
Price
road.
Chopper we go to, they got apartments built right on the hillside, you know, shoved right up against them, and I don't see where it's a pleasant looking, setup, and I don't see where it's gonna hurt anything. But, and I'm sure the Price Chopper, them more than happy to have apartments near them. So it's not unusual to see apartments, we usually hide them with a lot of trees and that kind of thing. So, any other,
Well, so to satisfy what Danny's saying is, in this R3 will say in the pilot that they can only build apartments, is that what we're saying?
If the developer's okay with it, I think, what I would prefer is that the resolution of intent that you just passed, that there be a motion amending that, to also include an item, that if a pilot is not approved, then the developer will not oppose the property being rezoned back to what it was before. I think that, I was just gonna, I think that will protect against, you know, the concern you raised, which would mean that they can't transfer the property to another property owner. And in the event there is no agreed pilot agreement and this project essentially goes away, and the city decides it doesn't want it zoned the R3, it wants to go back to what it was, then they won't, as a property owner, they won't oppose that rezoning.
well, if they wanna build apartments, I don't see why they would oppose the separate ordinance zoning for just apartments. You don't have to be a multiple thing. I don't see why we really need to put it in a pilot agreement. He said he wants to build apartments, and he said, that's what we're doing right here, you know. And, if the developer says, well, hey, we can't wait for, the time for the approval for an apartment zoning, then maybe their intent is not that reliable. I mean, we've already showed all of our intents here tonight, trying to work with them to get the numbers so we can have this relationship. And I think we did that, and we've already proved that to them and Travis, and I think that, you know, that we're really not out of line here to protect ourselves and protect the city.
Well, I think one difference is that we are.
Because see, if we put it in a pilot, Lori, we're still not gonna have a zoning for apartments, that's what I'm trying to say.
Granted,
Okay, I'm
I
sorry, go
understand
ahead.
that, but the one difference is that in doing it the way that we're doing it, we are a little bit more protected that those are the apartments. Because if we just say, okay, we're gonna convert it to an apartment one, we do that, they go by their wayside, now I can come in and build my cheap apartments, and there's nothing you can do.
Not yet, because it hadn't been approved to be zoned that. It's
Well,
zoned,
but
it
if
would
we are,
still
if that's
stay
what you're
in
wanting
one.
to do though, if
I'm
that's what
saying
you're
no,
wanting to
that
do.
we have a,
But we have to rezone it before they're gonna move forward with things. So that's where the difficulty is.
that's what I'm saying, if they can't wait to have it zoned for apartments, maybe they don't wanna build
But
apartments.
we don't wanna rezone it until we have the pilot. Otherwise, it doesn't make,
Well,
you know.
you're asking to put the zoning in the pilot. And I really didn't wanna do that, I wanted it zoned.
But what I'm saying though is what you're forgetting then is that if the pilot fails, you've got it rezoned to apartments, and he may not build, somebody else could come in and build half of this apartment thing and have a low-income apartment, and we don't have control at that point because it's down to an apartment and they're right in the zoning that they wanna be in.
The pilot agreement would protect.
The pilot agreement is protecting us, that this is the apartment that's gonna happen.
And he doesn't want it zoned to R3 unless the pilot agreement happens.
Correct, because he may come along and wants,
That's a down zoning. I think he would, if this project goes away, they would, I don't want to speak for them, but that they've told me is that they wanted to remain in one.
so even though we may need that, it's not really something that is beneficial in this particular situation.
Well, it sure is, Lori, if somebody sidesteps and we have it left zoned this way, and then he could sell that property just like Patrick just told you, and they can put anything they want in there. So I think that is pretty important.
I think the question is, for Patrick, and maybe you're talking about the details. Is there a way to amend the rezoning ordinance such that it doesn't become effective until after the pilot agreement is reached? That would mean no rezoning until that pilot agreement with those apartments happens.
Is that right?
Is that
So
possible?
I think we would, change the ordinance to, the effective date would be, it would be published after.
There's a 30-day protest, I mean, would it be, is the
Yeah,
30
it'd be-
days on the rezoning or on the pilot? It's on the- You said that there was 30 days.
Oh, the appeal.
Appeal.
Yeah, so, I think the best way would be to, in the text of the ordinance, make it effective. We would go ahead and publish the ordinance immediately, but within it, it would indicate that it would only become effective. So this would be in section 3. Just find
Effective date.
Yeah, section 4, take effect and be enforced from and after its publication.
Can you put the pilot agreement in there?
Yeah, that's what I'm just trying to think, should it be 10 days after the pilot is approved or 30 days? section 4 would read, this ordinance shall take effect and be enforced from and after its publication once in the official city newspaper and 10 days after agreement of the pilot agreement authorized by resolution, what was that, 968?
Correct.
Yes.
So once the pilot agreement is signed.
By
it is-
everybody, it's been
Right.
approved by you at a regular scheduled meeting.
And because that's an and in there, it has to happen, or this ordinance will be null and void.
Right.
That provision, that would never get to that point.
The next ordinance number is 2402.
There's no other discussion, I'd like to make a motion.
Yeah.
Ready to go forward?
Yeah, I think we're ready to move on.
Okay, I'd like to make a motion to approve ordinance 2402, approving the rezoning with the modifications to section 4. The ordinance, and I'll read those to you real slow, Lynn, all right? The ordinance shall take effect and be enforced from and after its publication once in the
Oh,
official.
ho, ho, ho.
Well, it's just as written.
Oh, okay.
I'm not giving you anything new yet.
Okay. All right.
Newspaper, you with me, a newspaper?
Yes, sir.
And 10 days after execution of the pilot agreement authorized by resolution 968.
I'll second the motion.
We have a motion and a second. You got that, Lana?
I do.
You do?
I do.
Okay. Any further discussion? Roll call.
Lane,
Yes.
McDaniel,
Yes.
Walker,
Yes?
Murdoch,
Yes.
Mayor.
Yes.
Thank you, council and mayor. The motion carried.
All right. Item 4C, Country Village Living Project. Consider ordinance ordering vacation of unnecessary utility easement depicted on the Country Village Living plat, and consider final plat for Country Village Living.
Yes, council, I think we wanna do the ordinance first, then. The ordinance is the last item attached to the staff report. So what is that? I think it was just attached to the back of the staff report. Essentially, this vacates, 3 easements on the plat. Your staff report also included a fold-out copy of the proposed plat, where you can see, and I'm trying to pull it up. In general terms, the plat area, the project is taking place off of 90th Street, which is the end of 90th Street and Oak Street, where the Brady Apartments were slated to go in the early 2000s. It's lot 18 is one lot of a larger plat in the area. The apartments that are planned, there's also a fold-out map in your staff report that shows the basic layout. There's 51 units there, patio homes. I think the intent, Don Parr is the developer, and he did apologize. He had a family vacation planned for this week, so he couldn't be here tonight. But the patio homes consist of 2 and 3 and 4-plex units. There's 54 of them, and you can see the general arrangement here. There are some architectural details This site plan was approved by the planning commission last month, as was the final plat. So the item that is the subject of the vacation ordinance are a couple of these utility easements. There's a 10-foot utility easement that crosses the site kind of diagonally. There's also a little portion of a sanitary sewer easement that's basically in the middle of the site, and a 16-foot landscaping easement along the east edge. So the ordinance vacating those references those by name. It also references the final plat. We did hold a public hearing earlier this evening and got no objections to that. So we're recommending approving that ordinance. So if you want to make that motion.
Anybody has any discussion, I'd just like to go ahead and make that motion.
Yep.
All right, I make a motion we approve ordinance 2403, vacating easements as presented.
I'll second that.
We got a motion and a second, got that, Lyman?
I do.
Roll call.
McDaniel,
Yes.
Murdock,
Yes.
Lane,
Yes.
Walker.
Yes.
Thank you, council. Motion carried.
Thank you, council. The next item is the approval of the final plat. Again, the final plat was forwarded by the planning commission, the recommendation to approve. The council's role in this is to accept easements and rights of way. So, if you would like to make a motion to that effect.
Just got one quick, just to clarify, these are age-restricted apartments.
The stated
Right.
intent of the developer is age restricted, yes.
And are they rental units or?
They will be rentals.
Condominium.
Yeah, they're not set up for
Not for
condos.
sale, okay.
They're not for sale.
All right, not that it pertained particularly to this, but I.
It
was
would,
just
if the plat
curious.
would look much different if they were condos.
Condominiums, yeah.
Yeah, they don't have little subdivisions in the plat.
So you need
Just a motion to approve the final plat.
I move we approve the final plat for Country Village Living, accepting the dedication and vacation of its names.
Second that.
motion and a second, any further discussion? Roll call.
Lane,
Yes.
McDaniel,
Yes.
Murdock,
Yes.
Walker,
Yes.
and Mayor.
Mayor votes on this too.
Mayor.
Yes.
Thank you. Motion carried.
All right, thank you. Item 4D, consider temporary use permit for the DeSoto Family Fun 5K run.
Yes, council, this will be the first year for this event. Heather Lucas is here representing, she's the applicant in this case. It's a 5K run, just 3.1 miles. The event is scheduled to take place the Sunday after DeSoto Days, that same DeSoto Days weekend. They want to start at Miller Park. They're going to take advantage of the tents and the trash facilities, restroom facilities that will still be there from the DeSoto Days. The run will start in Miller Park. It'll take a loop around the park, and then it'll go down 82nd Street to Ottawa, turn north on Ottawa, and go, I think, loop around the Scale House at the Riverfest Park, and then go back. So that's 3.1, that's 5K. It's a public event, so, and it's on public property, so it does need approval of the city council for that. They're also requesting a rain-out date for the next day, which is Monday. It's Labor Day. So the items that we consider when we're looking at a public event of this nature, really, there's a couple of them that probably warrant some discussion and some explanation by me or by the applicant. The biggest thing here is that with a race event, a foot race running event on public streets, it's customary and almost required that those streets be closed. So this is a pretty significant street closure. The request is to close these streets for a 2-hour period on Sunday morning, beginning at 7:30 and ending at 9:30. They expect that the goal is to have about 100 participants in the race, and Heather's hoping to round up 25 volunteers to help run the race. So closing the route will be a significant impact to people who live along the route and motorists, particularly motorists who want to access the Kansas Bridge, because the route crosses 82nd Wyandotte. So Wyandotte going to have to be closed during that 2-hour period. So in discussions with Heather, we thought that a condition of the permit should be that we post officers there at that location that would allow maybe during breaks and race events, allow to direct traffic through on a case-by-case basis as opportunity arises within the gap and runners there. And also post volunteers in case there is some emergency access, emergency cruising through there, they can stop the racers at that location. The other thing would be a public information effort, getting out along the route and the community in general, and the applicant has agreed to go out and hand out flyers and make efforts on social media to notify those along the route and those who be directly affected of the closure. She's also done quite a bit of legwork in coordinating with the EMT and with the fire and with Johnson County to notify them of the event. From a public safety standpoint, the route also crosses the BNSF main line on all of them. And I was surprised to learn that BNSF does have a process where you can request that the rail be closed down. Train traffic on, I see that look. Train traffic on the rail be closed down for the period of the event. And I did talk to BNSF's representative, and he confirmed that. He said it's relatively easy on this line because traffic is very light. And it has been for several years, and will probably remain to be light. So he said, when and if we approve the dates, that he'll arrange for the train traffic.
That
was, I think, a big.
That's good to know for other events we might have down there.
I think maybe Heather's the only one that could get him to do that.
I guess so we'll have to.
Yeah. In conclusion, we do have a few recommendations on this particular event. Page 3 of the staff report. Just has some caveats and conditions associated with approving the event, that the organizers will do the public notification effort associated with closing the route, distribution door hangers, knocking on doors, doing that sort of a thing. That the event organizers will coordinate with the sheriffs to arrange for the 2 officers at Wyandotte Street. They'll also coordinate with BNSF, MedAC, and the sheriff. But they'll also be responsible for relocation and erection of the barricades. The barricades will be out at various intersections from the parade the day before, the DeSoto Days parade. We always drag them out on Friday. The DeSoto Days folks put up those barricades and remove those barricades as the parade gets done. They typically sit there until Monday or Tuesday in this case. So they'll be at those intersections, and so the parade organizer, or the event organizers will be asked to relocate those barricades to the locations where they'll need for closures. And then lastly, thought it was important just for the motoring public to be aware that there will at least be a quasi-closure of Wyandotte Street, so to say. So we have the ability to make some customized signs to the effect that, hey, this intersection is going to be partly closed on Sunday morning. Headed to church, be aware, that sort of thing. So those are the condition I think are appropriate for this event. It's the first time we've had an on-street event that includes street closures, so I think it warranted a little more discussion. And Heather's been very responsive and very energetic in the effort. So if you have any questions about the event, Heather's here to answer those. And I'll stop there and answer any questions you might have.
Eileen.
About the Johnson County Sheriff's Office fees, overtime fees or extra fees?
Yeah, the sheriff does charge for any event that we have, DeSoto Days or whatever. If we want sheriff's presence, they charge a rate of $35 to $39 per hour for an officer to come out and just be here. So in this case, we would be asking for reimbursement. If they charge the city, we would make the request under our contract. So we would ask for reimbursement from the event for those 2 officers. So yeah, that would.
And that's that's been conveyed to the.
Yeah, we've discussed that, yeah.
Did you say also that they did give information to the church? You said something about the church, because that route would be closed, and that's a lot of people go that route to the Baptist church that morning.
Yeah,
So-
well, I just said Sunday morning churchgoers, I didn't think, I wasn't thinking a particular church, but
Yeah.
if it's churches, yeah, that makes sense to notify.
That notify the pastors that they could tell the
Yeah,
people.
that's a good idea, yeah, at least a week in advance.
Yes. So he can tell people to go another route.
Yeah. Or get there early.
Come late. It's over at 9:30, right? I mean,
Well, you gotta remember Sunday school.
yeah.
Okay.
It looks like it's pretty well planned out.
Yeah. Entertain a motion?
Yeah, I'd make a motion that we would approve the temporary use permit for the 5K fun run, waiving the $50 application fee, and that the approval be subject to the 5 conditions listed in the staff report.
I'll second the motion.
And we have a motion and a second. Any further discussion? All right, roll call.
Lane,
Yes.
McDaniel,
Yes.
Walker,
Yes?
Murdock.
Yes.
Thank you, council. Motion carried.
All right. Item 4E, consider temporary use permit and special event alcohol permit for Bikers for Boobies.
Oh, that sounds like me. This is an annual event that Connie Shackelford at Beer 30 does. It is the run for breast cancer awareness and to raise funds for them. I'm not gonna belabor the points in the staff report because you probably have read it for the past 5 or 6 years. Connie had to leave. She was in some pain from the accident she suffered here a while back. But she is also asking that the fees be waived. She did pay the fees for the temporary use permit as well as the special event alcohol permit. She does have the approvals, which she handed me tonight from the state, granting her the approval for the special alcohol event and the temporary extension of the premises for the beer garden outside of the property. So it is the council. If you have any questions, I'll be happy to answer.
Refresh, the temporary, we don't have any out-of-pocket expenses related to that temporary,
The special
alcohol beverage permit?
We do not.
Okay, and
Only on cereal malt beverage.
All right. Any further discussion? How about the motion?
I'll make a motion, we approve this temporary use permit. On these separate motions.
yeah.
And waiving the temporary use fee of $50.
And this special
We're gonna do them in 2 motions.
Oh, it says here to do them in individual motions.
Right. We're just following your direction plan, huh?
Oh, okay.
For the Bikers for Boobies.
I second your motion.
Okay, got a motion and a second. Any further discussion? Roll call.
Hold on, I have to grab another roll call. Sorry. Lane,
Yes.
McDaniel,
Yes.
Murdock,
Yes.
Walker.
Yes.
Thank you, council. Motion carried.
Okay, I make a motion, we approve the special event alcohol beverage permit for the Bikers for Boobies and waive the $75 fee.
I second your motion.
Any further discussion? Roll call.
McDaniel,
Yes.
Lane,
Yes.
Walker,
Yes.
Murdock.
Yes.
Thank you, council. Motion carried.
All right. Item 4F, Consider bids for repairs to the main lift station and DeMeadows lift station.
Yes, council. We had an event in May where we had just an unusual amount of rain during the whole month of April. In the morning of, and actually May too, morning of May 17th, we had a very intense rainfall event that essentially overloaded the sanitary sewer system in the town. It really wasn't so much the system, but it was two pumps there, the DeMeadows pump station, which is where you'd expect it to be down by the DeMeadows subdivision, and also the main lift, which is in the northeast corner of the engineer parking lot. The main lift pumps every drop of wastewater in the town, gets pumped there out to the sewer treatment plant. Those two pumps that evening ran 100% of the time at 100% capacity and couldn't keep up with the flow. And as a result, we had several, probably a half a dozen basements adjacent to one or the other that did get a backup, sewage backup into their basements. That was a very unusual rainfall event. I think an extraordinary rainfall event. I don't know that we've ever had those conditions, both with the preceding just saturated soil conditions and the conditions of that night. Introduced a lot of infiltration rainwater into the sanitary sewer system that doesn't normally happen. But the pumps should have been able to keep up better than they were. So in the following weeks after, Doug started reviewing some of the pumping logs of those two pump stations and noticed that the pumps were running for longer periods of time than they had before, and this extension happened gradually over the last 6 months or so. But we didn't see a corresponding increase in total flows at the sewer plant. So that tells us that the pumps are, even though they're running, they're not pumping as efficiently. So we have them pulled. We have the ones down at DeMeadows pulled, and we had a couple of, actually all three of them at the main lift. And what we found really on both of them was that there are two pumps at the DeMeadows and three pumps at the main lift. All of them just show signs of wear. Just actually really nothing catastrophic, but just from being old, things like bushings and the pump impellers and the pump casings and the windings are all showing signs of age that contribute to lower capacities of those pumps. So it's clear they're in need of replacement, although nothing catastrophic has happened to them, and they probably will serve their purpose as long as we don't get another big rainfall event. Like we did, they'll probably serve their purpose for another several years, but the event that on May 27th is not one that we want to have replicated. For the DeMeadows pumps, they're about 20 years old, so they're kind of ending, they're at that stage of their life where it's reasonable to expect them to be failing. The main lift is only 10 years old, and the brand of pump we've come to understand used to be a very good manufacturer, very high regard, but over the last several decades, their quality has diminished to the point that the pump representatives that we're talking to are not surprised necessarily that those have worn out prematurely. So what we want to do is replace two of the three pumps at the main lift and both of them at DeMeadows. And what we've done is we've gone out and researched. Doug has primarily researched pump manufacturers that he would like to see, and he's got a very strong preference for an ABS brand of pump. This is kind of more of it's kind of like we did with some of the components at the water treatment plant. We researched the components that we want and selected those components rather than just getting competitive open bids on any type of equipment that's out there, because that's what we do with the main lift, and this is where we got it, where it got us. So Doug has a preference for the ABS brand. We were able to get two bids for the main pump replacements. The low bid was from Environmental Process Systems at $25,189 each. We're recommending replacing two of those three, and we'll look at the third maybe in a following year. The total there is $50,378. For the DeMeadows pumps, we also got a bid from the Environmental Process System. Replaced two pumps at $13,098. So what we'd like is your authorization to move forward with those purchases. The unfortunate part is that the sewer fund cannot absorb that sort of expenditure. We'll see a little later where the fund balances lie and expenditures lie in that fund, but it just simply can't take that sort of one-year hit. So what we're suggesting is, like we've done in the past with vehicle purchases, a loan from the electric reserve fund to be repaid with interest. And the benefits of doing this are that we can borrow from ourselves at a lower rate than we can get on the open market, and the interest that we pay ourselves back is a higher rate than we're currently getting with the investment income from the fund. So the suggested motion is in your packets, but I just got a note from Patrick that we're gonna need an ordinance authorizing the loan from the electric utility fund. So the first part of the motion authorizing the administrator to accept the bids for the 2 lift stations in the amount of $63,494, that stays the same. But then we'd like you to direct staff to bring back an ordinance authorizing a loan from the electric utility.
So you are replacing these with ABS then?
ABS, yeah.
Okay.
Yeah. And the term on the loan would be 4 years at a 2% interest rate. The 2% interest rate is what we do for the vehicles. And is it, do we do 4 years on the vehicles too? So it'd be the same. And we'll budget this in the utility, in the sewer fund moving forward.
All right. Any discussion on it, or take a motion?
I move we authorize the city administrator to accept the proposals from Environmental Process Systems for the replacement of 2 pumps at the main lift station and 2 pumps at the DeMeadows lift station in the total amount of $63,494, and to authorize staff or direct staff to bring back an ordinance allowing us to borrow the funds from the electric utility fund to be repaid over 4 years at 2% interest.
I'll second the motion.
Get all that, Lennon?
I do.
Any discussion on it? Roll call.
Lane,
Yes.
McDaniel,
Yes.
Murdock,
Yes.
Walker.
Yes.
Thank you, council. The motion
No.
carried.
Yeah, now would be a good time. I'm gonna have to leave. I've got some medication at home I gotta take, and I'm having some trouble trying to stay comprehensive with what's going on. And I know we got a lot left on the agenda, and I ain't gonna be able to make it, so I do apologize for that. I would say, item 4L, the discussion of the city council position, that possibly you table that until the next meeting, and we can have a better discussion of that. So I do apologize for having to leave, but I'll turn it over to Rick, if you don't mind.
Sure.
Thank you very much.
Thanks.
All right, item 4G, consider resolution permitting use of bow and arrow hunting of deer at 31850 West 89th Street.
Yes, council, you have approved this resolution last year for the same property. I did work with Mr. Graves. He did meet the compliance requirements, so this simply allows him, as the owner of the property, to allow deer hunting with a bow and arrow or target practice on the particular property described in this resolution.
So resolution number
969.
969.
Yes, sir.
I move we approve resolution 969 permitting bow and arrow hunting of deer at 31850 West 89th Street. Roll call, oh, sorry, Lam. Roll call, please.
Lane,
Yes.
Murdock,
Yes.
McDaniel,
Yes.
Walker.
Yes.
Thank you, council. Motion carried.
All right.
Yeah, I'll make a motion, we approve resolution 970 granting an application for a 20-acre parcel located just to the east of 31850 West 89th Street for exemption from the prohibition of discharging bow and arrow within this city.
I'll second that.
We have a motion and a second. Roll call, please.
Walker,
Yes.
McDaniel,
Yes.
Lane,
Yes.
Murdoch.
Yes.
Thank you, council. Motion carried.
Okay, for I, consider temporary use permit for United Methodist Church Family Movie Night.
That would be me. The United Methodist Church is going to do something that I haven't seen since I was a kid, and they're going to provide an outdoor movie for the community on Baseball Field B down at Miller Park. They are asking to do this on Friday night, July the 23rd. The movie will begin just after sunset. They're asking everyone in the community to come and participate, bring their lawn chairs and their blankets, and there will also be light refreshments provided. The duration of the event will be about 3.5 hours, and they're also requesting a waiver of the $50 permit fee. Pastor Jeff, you have something to say?
It's July 15th, and that should have been in the permit.
Okay, July 15th. My apologies.
I'll make a motion that. Is there an item on this?
No, there's no resolution, it's just a
for Agenda 4I, that we approve this and waive the permit fee, $50.
I'll second the motion.
Okay, we have a motion to approve waiving the fee and a second. Roll call, please, Lana.
Okay. Murdoch,
Yes.
McDaniel,
Yes.
Walker,
Yes.
Lane.
Yes.
Thank you, council. Motion carried.
4J, consider ordinance for special use permit for a dance studio at 8960 Commerce Drive.
Yes, council. This item was considered by the planning commission at the last meeting. That property is zoned OI, office institutional, and really, I think by a quirk of the zoning regulations, for some reason, dance studios require a special use permit in that district. And from a layperson's standpoint, it wouldn't seem like a dance studio is such a unique use that we would need to take particular.
Age limit?
I can't answer that. The use permit doesn't.
Okay.
But I don't know how comfortable you'd feel. Long story short, it does require a special use permit, and I've been actually talking with a representative that owns the property who had been working with Ignition Dance Studio on trying to get them lease space this year to possibly have the studio open this summer. I was informed just today that that lease arrangement has fallen through, but they're hopeful for next year. So they want to proceed with the use permit for this year. The public hearing was held on the 21st of June. Planning Commission recommended approval. There really wasn't any feedback, positive or negative, from the public. Staff review is positive of this. The space they're going into is in Building 4, the second from the west space. I think that's right next to the pharmacy. Not that there's anybody with any interest there. So staff would recommend approval. Patrick's prepared an ordinance that would approve the use permit. The ordinance does have a 10-year time limit. So with that, I'll answer any questions you might have.
Ordinance number 2404.
Comments, questions from staff or from council? Anyone make a
No,
motion?
I'll make a motion, we approve ordinance 2404, granting a special use permit for a period of 10 years at 8960 Commerce Drive, Building 4.
I'll second that.
Okay, we have a motion and a second. Roll call, please, Lana.
Lane,
No.
McDaniel,
Yes.
Walker,
Yes.
Murdoch.
Yes.
Thank you, council. The motion carried.
Okay.
Actually, unfortunately, that motion doesn't carry.
It doesn't?
No, because it had to be approved by a 2/3 majority
Oh.
of 6, so with just 3, it would not pass.
So we should have, if we didn't know that, we probably would have put it on, tabled it until we had full.
They're, how long do they have to wait to reapply?
I don't think we have a specific provision,
We gotta get it
in the,
figured out.
yeah. You know, I don't know, Danny, if you'd be open to, you know, obviously, you could make a motion to you know, send it back to the planning commission or essentially
Well,
prevent it
since they
from-
didn't show up at the planning commission, and they didn't show up here for this, I would like to see it sent back to the planning commission.
That is true, the applicant was not present at the planning commission.
So,
Phil?
yeah, that would be the only option. Just
They want it, they can come back. They cared enough, they probably would be here.
Okay, moving on. Item K, discussion of the 2017 city budget.
So how's everybody doing? Is everybody okay with this?
Yeah.
We're great.
All right.
My watch says it's Friday. I think we've gone too long here.
I have some
He's
handouts.
got the
This is a
timer.
PowerPoint presentation I'm about to give. Don't worry, it's big, it's big right number.
I did appreciate you putting me to sleep reading material.
Oh, this won't put you to sleep.
No, I did, though, when I read the first.
Well, if people leaving, but we're
Just mention budget. This is your money.
And I want to thank Bonnie for
Hanging out.
for doing a lot of this. She really, you know, with transition that we're having at City Hall, Bonnie really did much of the number crunching that needed done. And I want to thank her for that, thank her for hanging out here tonight. I can't believe we're losing people. This is the best PowerPoint you'll ever see. Okay, I'm gonna dim the lights too. I do, yes.
Your clerk would like to have one, please.
Yes, and Bonnie. You got yours, right?
I have one. Thank you. It's easier to type that way.
Thank you guys for staying. You won't regret this. All joking aside, I don't want to belabor anything that we're not ready to hear, but the last slide of this is the schedule, and the schedule is pretty tight. We basically have July to work through everything. Our drop dead date publication for our newspaper, we have to get basically our budget in with the numbers to the newspaper by July 29th, so that it can be published in time to have a public hearing in time to get the budget to the state toward the end of August. So we really have July to work through the details. So I know, you know, had a full agenda, but I did want to give the introduction. I know you guys you've had it. We had the summary sheet that kind of gives a general overall picture of where the funds stand. So I'm going to go over the different parts of that just so everybody's comfortable with that, comfortable where we are. We'll look at some historic trends in terms of historic mill rates, historic asset valuations, and historic fund balances. So we can see where we are from a perspective of, say, the last 10 years. We'll drill a little deeper into the general fund, debt service fund, mill levy impacts. We'll look at the water fund, the sewer fund, capital improvements, and then some additional service considerations if our appetite allows that. Then we'll look at the schedule. Page 3 then of the presentation here, this is a part of that that spreadsheet that you were given when you got the budget, basically it's an overall summary of all the funds. In the left column there is the 2017 budget, the proposed budget that you were given, the general fund budget. You can see our revenues are at about $3.3 million there. Sales tax at 1.3, property tax at 876,000. If you look at the right column there, you'll see the 2016 general fund. Those are the budgeted numbers for the budget that we're currently in the middle of. And you'll see that the budgeted revenues for this year are only $3.0 million. And that's compared to $3.3 million that we're proposing for next year. The difference there mainly lies in the property tax. This is the mill levy. That's what the mill levy gets you. So you can see for the general fund, the mill levy is really, it's only a small portion of the revenues that we rely on for the general fund operations. The general fund is everything from city hall to streets to parks, anything that's not backed by utility rates, essentially. So our utility funds are the water and the sewer and the refuse primarily. So small changes in the need for revenue on the general fund cause pretty big fluctuations in mill levy. So you can see that a big chunk of our revenues come from sales tax, actually. The middle two columns are the water and sewer fund. These are all just service charges, 1.5 million for the water, 0.477 million for the sewer. Down at the bottom of this are expenses. We're anticipating budgeted 2017 expenses. The budget that you were delivered has expenses of $3.4 million. The water fund has expenses of 1.7, the sewer fund of 0.6. And you can see that the budget cycle we're currently in for 2016 has budgeted expenses of $3.6 million. You don't have to be an accountant to see a problem here. In 2016, the revenues, but the budgeted expenses exceed the revenues by quite a lot. The next sheet shows the other funds. I won't belabor these. Refuse, law enforcement, debt service fund. They're relatively stable year to year. Revenues are pretty much what the expenses are. There are some changes in the debt service transfers that we'll talk about from water and sewer that we discussed in terms of the rate impact analysis that we did last fall. There's big changes there, but overall the revenues in equals what's going out. So here's an overall 2017 overview for the general, or for all the funds of the city. Revenues of 9.1 million and expenses of 9.4. These are budgeted expenses. That again doesn't really take an accountant to see that and think, uh-oh, there might be problems here. But there's reasons for that discrepancy that I'll get to in just a second. Slide number 6 then shows a snapshot of cash balances. At the beginning of 2016 in the general fund, there's a cash balance of $861,000 roughly. We are projecting that now, right? We sit here at the middle of the year. We're projecting that balance to be somewhere around $461,000. It's a $400,000 decline in the general fund balance just based on this year's budget. So that the ending fund balance here of 359 projected, this would be and I mislabeled this should be 2017 ending fund balance. So if we just follow the budget to the T that I have presented to you, the fund balance will go down by almost another 100,000. There's a gap in there. Every year there's this gap between what's budgeted and what's actually spent. So there's an appropriations level that we could go to if we have to, but we never spend that much. And this is true for the general fund, but it's also true for the water and for the sewer fund. So there's this gap. And if you account for that gap and you project this gap that's going to happen next year, we know there's going to be a gap this year, there will be a gap next year, we think we can comfortably say that with the budget we've proposed, the general fund balance will essentially stay level. For the water fund, there's a similar gap. The cash balance is projected to go down. There's a similar gap in the budgeted to spent, but it won't completely make up for the lacking fund balance. These, on the water fund and on the sewer fund, these declining fund balances are actually modeled into and part of the utility rate structures that we approved last fall and that we started implementing this spring. We know these fund balances are going to go down, but we made the choice that we're okay with that risk to buffer some of the increases that we otherwise would have had to impose. Sheet 7 then is a similar kind of fund balance discussion for refuse, police, and debt service. There's really nothing exciting there. Just shows these negative numbers at the bottom actually represent a positive trend in fund balance. So the fund balances will go up on those funds. Sheet 8. These are graphs. The graph on the left shows the trend starting in 2005 of the budgeted figures as opposed to the actual spent. And you can see there's always a gap in there. We always spend just a little less than what is budgeted. And the chart on the right shows the dollar amount per year of the gap. So that you can see, say in 2005, we spent $300,000 less than what was budgeted. This is in the general fund only. So there's always this gap, this unspent allocation gap. And it really is a result of the way we've done the budget over the last 10 or 15 years. This gap is a result of each individual line item never really spending the full amount. So we have hundreds of line items, hundreds of budgeted dollars. We never really spend each line item. And so what it really amounts to is it's kind of a contingency fund, but we don't really call it that. It's sort of a contingency hidden in each of the line items. Now, we can choose to keep doing that, and that's fine. There's nothing wrong with that. But we could also choose maybe in the next year's budget or the one after that to say, let's just put a big contingency fund in there, and let's have these line items more closely match what the actual expenditures are. And I think that's a discussion for another year. Let's talk about historic trends, assessed valuation. Chart on page 9 shows assessed valuations. So these are the result of the county appraiser coming out and assigning a market value to every property in the city. Then he multiplies that by 11.5% if it's residential, and he multiplies it by 25% if it's commercial. And he sums all those up, and that's what the assessed valuation is. So on the chart here, these values actually are in thousands. So you can see in 2007 we started off with $56 million in assessed valuations. It dipped out in the recession in 2012 with $52 million. Last year, so for the current budget cycle, our assessed valuation is $62,900,000. Next year, that's going up to $66,400,000. So the assessed valuations went up about 5.5% this year. So starting next year with the next year's budget cycle. That's good. That's good news. The backdrop on that is that in next year's cycle, we're not going to be able to take advantage of the increased assessments that the mill levy generated by that. The state law, the property tax lid law will come into effect, and we won't be able to take advantage of that gap there. The next chart charts year-ending fund balances for our three major funds. The general fund is in red, the water fund is in yellow, and the sewer fund is in blue. You can see the general trends. I don't need to really describe it to you, except that I did want to bring your attention to the last column there. So if you look at 2017, you see where those dots are, and then you look at 2016 compared to 2017, and you can see the general fund balance. So starting in 2015, that it's, I think I said before, it's like somewhere around 861,000. We expect that to dip by about 400,000 this year, and we'll talk about what we can do to kind of buffer that even moving forward. But you know, the budgeted dip is somewhere around 600,000. And we think we're gonna have, right now, somewhere around 200,000 of the unexpended budget, that gap, so that the general fund will only go down that 400,000. With the 2017 budget, essentially that remains flat, the one that we're proposing. The water fund, the planned year-end fund balance reduction is shown with the downtick in that yellow line, and it's the same in the blue line at the bottom. Those are planned. So looking a little closer at general fund revenues, franchise fees for the budget cycle we're in were projected at $652,000. That's our budgeted revenue for the franchise fees. We're actually projecting that to be only $570,000. And there's really no reason, really, I don't think, to ever have believed that it was gonna be 652. You can look at prior year actuals for the last 2 or 3 years, and they're all right around 550, 530, somewhere in that range. So what we've included in the 2017 budget is a figure of 580,000. That's just based on kind of the realities of where we are. But it's a pretty significant reduction in revenue when you're comparing 2016 to 2017. If we look at property tax, 2016 valuations, we just talked about $62,925,000. The 2017 valuations has increased by 5.5% to $66,400. So when you look at valuation, what that means, $66 million valuation means for us that 1 mil of property tax generates $66,000 for us as ad valorem income to the general fund. The 2016 budgeted revenues, we have our mill levy for the general fund. This isn't the total city mill, but just for the general fund is 8.86 mils. That's 2016. That's going to generate about $557,000. The 2007 projection that you have suggests a mill increase to 13.19 mils. That's an increase of 4.3 mils to get to the projected revenue of $876,000. That's what we need to keep the fund balance from sinking further. General fund expenses, we talked about the budget for this year is $2.6 million. We're projecting only about 2.3 million current projections. There's that gap again. The proposed 2017 budget is 3.4 million, and we would expect a further, a gap again next year. But we're going to allocate those funds. So it's down, the budget's down 200,000 from 2016, and that's a result of some cuts in service, some really kind of a whittling on this reserve that we've talked about in each one of these line items. We've kind of whittled down. We're putting off some expenditures that we would like to have done next year, and we'll get to those later. General fund highlights then, just throughout the budget line items, the budget you received has narratives at the front of each kind of budget category. A 3% merit wage increase for employees is included in all the budgets across all funds, and this is the same as we did for this year. Our liability insurance is increasing by 10%, and that is more a result of getting a more comprehensive list of assets included in our insurance. I think there were some assets that we didn't have on the insurance policy in years past that are now. So most of that 10% is a result of that. Another item of note is that capital improvement transfers from the general fund are staying the same at 4.1 mils. That's the mill rate that we set for street improvements. So it stays the same, and it'll generate about $272,000 for the capital improvement fund. The employee benefits budget is 13% higher than it was last year, and that is largely because of some moderate increases in healthcare costs and some changes to family statuses and what people are signed up for, but also because it was just under budgeted in 2016. We're going to go over that line item this year. And the fifth item is that Jay was really, I don't know how much we've talked about it, but the pool really needs painted next year.
I thought we were taking $10,000 a year and putting it in a pie.
Yeah, we are. We are, but, and we've done that, a couple of sequences, we've done that. But really, all that gets you is kind of a bead blast of what's there, and then a repaint over. And we've done that enough times that that process won't be successful long term. What we need to do now is go back to concrete, and then repaint the thing. So it's a higher effort.
$50,000 every time we painted it. Since I've been, we painted it twice.
Yeah.
$50,000 each time.
Yeah. I think the difference in effort that we need is an additional 50. It's
Okay.
total $50,000 that we're deferring. So, you know, it won't be nice to try and get by with that, but we've just deferred it. And so we might need to patch or paint here and there. A look at the debt service fund. There's not a whole lot that's interesting. I mean, the debt service is pretty boring, but there are changes in terms of revenue transfers from the water and from the sewer. We decided that the water bonds are coming due, and that the water fund is going to, currently it's been transferring about $150,000 to the debt service fund. In order to cover all of its costs, that'll have to increase by $240,000. Similarly with the sewer fund, we're paying for that sewer bond primarily with general fund dollars, and have been for 10 years. We've made a decision as part of the rate study that we're going to increase the sewer fund's contribution to those debt service by basically double it. So it'll be another $70,000. So it'll be $140,000 for the sewer fund going into the debt service fund. This is the prettiest chart you'll ever see, and it's too bad Jeff left because it's kind of his chart. This shows debt service schedule going out for years, and we're at 2016 on the far left side of that, and it really doesn't get much better till 2032. So I think the message is that, you know, with all these different debt services that have come on and the level that we're at, you know, it's right below 1.6 million each year that we have to pay to debt service. All that gets funneled through the debt service fund. And so we do have a specific mill levy that we levy for debt service. In this case, I think it's somewhere around 6 mills, somewhere in there, and that'll stay the same. Let's talk about mill rates. I've already kind of dropped the bomb that the proposed budget has a 4.3 mill increase. The chart on page 16 shows our mill rate, just history over time is just relatively flat. You can see increases in 2011 and 2015, and then the proposed one in 2017 puts the mill rate at somewhere around 26.5, and it's currently somewhere around 22, a little over 22. The chart on page 17 gives a comparison, not an excuse, but a comparison of DeSoto's mill levy to other cities throughout the state. All these other cities are cities of the second class with populations ranging from $4,000 to $6,000 and assessed valuation in the range of where DeSoto's is, or assessed valuation. So like, say for instance, Abilene's a little bit bigger city, but their assessed valuation's somewhere close to ours. And you can see that in terms of just the city mill levy, DeSoto had proposed 26 or so, compares nicely to, I think the next closest one would be Eudora at 33.9. You see a Colby at 34. In the 40s is pretty common for similar cities. You also stack the county and the school on top of that and get the total mill levy for all those cities. And you can see that DeSoto, and the 157 there listed for DeSoto is considering the proposed 4.3 mill increase. 157 is still somewhere in the middle of the range. And if Alvy was still here, we'd look squarely at Alvy about why we're in the middle. Not to belabor that point. Slide number 18 shows how a 4.4 city mill increase would affect different property owners throughout the community. At the top, we're looking, the first 3 rows are single family. The median property value for a single family home in DeSoto is 220,000. What was called, and this was off of Zwillow, so I don't know how much stock you want to hold in there, but it seems reasonable for a comparison. Lower tier is $115,000 property value. Top tier is $362,000. So if you look at the average, let's just take the average of 220,000. Their assessed value is 25,300. 4.3 mils on that would equate to a yearly increase in their tax bill of $108, a little over $9 per month. So you can see the other monthly increases and yearly increases that a 4-point mill would represent. And down at the bottom is a commercial property. This would be, I think Huhtamaki is close to $15 million valuation. So I would imagine this would be the class of Rear Rig and Intervat and Engineered Air would probably be somewhere in that class. I didn't look at them, but some are close. Let's now look at, is there any questions on any of this? Nobody? You're good. Is anybody bored? Should I step it up? Okay.
Doing great.
Okay, thanks. Let's look at a little bit at the water fund then. We talked about the utility rate study. Revenues for the water fund. We did the study in last fall, and we can get you the information if you forgot it, but recommended a 10% increase in water rates for 2016, and we implemented that in 2016 at the beginning of this year. And revenues are showing it. You know, there's a bump in revenues, there's a bump in our projections. This was just 100% to fund the bond issue that's coming due. It's nothing else. There's another recommended rate increase in that utility study of 8% for 2017. Whether or not we implement that is going to depend on another look at the projections this fall, which we'll do. We'll do each fall, and for possible implementation in January. Like I said, the revenue projections for 2016 do have an increased bump to 1.3 million. In 2015, that goes from 1.3 to 1.4 million. It's about a 10% increase. That's what we expected for this year. The 2017 budget projects revenues at 1.5 million. That represents about a 5% increase. So the study suggested 8. This is suggesting 5. That's sort of the range of the possibilities we look at. Expenses for water fund. Really, the only there's a couple things we want to talk about. 23% overall increase, and that's mostly because we're increasing the debt service transfer by $240,000. We also have to, in comparison to 2016, there's a line item called sales tax payable. And this is sales tax that we have to pay the state because we collect it from our residents. So the money comes in, but there just wasn't a line item for this year for whatever reason. I think it just got omitted by $48,000. So that's part of the increase as well. And then also we wanted to bring to your attention that the water fund does show $10,000 for the purchase of a mower. And I know that this was an item that we talked about specifically last year, and we can talk more about it. I don't want to belabor it, but I think the end discussion point from Doug, if he were here, would be that sharing the mower, because the discussion was we already have a mower out at the water plant, you can share it between the two. And that's okay, I mean, it works, but it does take staff resources and time. But it is also a little bit counterproductive, because if you look at the life of the mower, it's not how many years it's going to last, it's how many hours it's going to run. And so you're just putting twice as many hours on the same mower that you'll just have to replace twice as fast. So in the long run, it might come out a wash. I don't want to belabor that any more than that just there. The water fund balance, as we talked about, is reducing from about $795,000 to $575,000. We have these unexpended appropriations somewhere around $75,000. That's kind of what the trends have been in that water fund. So we project a year-end fund balance for 2017 of about $650,000. That was a planned reduction based on the utility rate study. Sewer fund revenues paint a similar picture. We decided not to increase them for this year because there was such a big water rate increase. Recommended a 4% rate increase for 2017. Revenue projections for 2016 are pretty much in line with the budget and with where we've been the past several years. The 2017 budget does include a 3% increase in revenue, so we're assuming we're gonna go ahead and implement a 3% increase in that fund. Expenses are the same. We have an increase in expenses because of the increase in transfers to debt service. The expenses also include $20,000 for purchase of some mixers at the sewer plant itself, just for, in terms of treatment efficiency. Doug could explain more about the need for those mixers later. And year-end fund balance, again, is going down from projected this year of 252 down to 140,000. That's getting pretty lean on the sewer fund. I don't want to really go into a whole lot of detail about capital improvements, but just to say that the amount of money we have to spend on capital improvements for next year is essentially what we had to spend this year, $616,000. That'll fund our road improvement program, and not a whole lot else. So there's decisions to be made there. In the 2016 budget, the budget just said unallocated or unspecified capital improvements or unspecified road improvements. There's no reason we can't leave the 2017 budget as that, so in the budget, we just include $616,000 of unspecified improvements, and then have a more detailed discussion about what improvements we want to implement for next year. I think the message there is we know there's really strong desire to do something with 91st Street, at least fix the one that's there, and there's a desire to extend it on through. We want to do things of that nature. We would be looking at foregoing the road maintenance program for a year. I think that's a reasonable discussion to have. There are several pages in this slideshow of the capital improvements. You got a bigger listing of capital improvements in your packet the last time. These just show kind of the top. We all got together and kind of listed the top 2 or 3 in each category as a kind of a priority basis. So this schedule just lists those. The thing I did want to draw your attention to is on page 27, vehicles, equipment, and asset management. We haven't done a whole lot of discussion about this, but a good example is the road maintenance program. It's essentially an asset management program. We established a funding level that was going to keep our roads in decent shape over time, and it's the same funding level every year, and we can make individual decisions and priorities on a yearly basis on how to spend that money. I think it's a very sound approach to take in terms of other areas of stuff that we're responsible for, like vehicle replacement schedules, or building maintenance funds, or asset management equipment replacement in the water or sewer fund. So you'll see on there's several line items on that. The first one is the equipment replacement program. We're looking at $140,000. And I think I provided some detail on that, on the equipment stuff in connection with the budget package. Basically, really all we did is took every piece of equipment that we have, from rolling stock to backhoes and trackhoes, assigned a replacement value to them, and then assigned a service life to them. And you just divide those numbers out, and you come up with a number each year that it's going to take to keep your rolling stock inventory replaced. That number we come up with is about $140,000. We did a little looking in the past, from past budgets, about how much are we actually spending in all these budgets for this equipment replacement. You know, we replace trucks, we replace backhoes, we do the Bobcat leads, we do these things. They're just not really part of a comprehensive program, and they're not something we can plug into a budget every year and be knowledgeable about what that number's going to be. As it turns out, we spend about $95,000, $93,000 on this sort of effort anyway. So the gap is really $50,000 that we're looking at. And there's all kinds of tweaks that we could do to these equipment replacement numbers. We could do it all day long. But that's the sort of thing that I think is worth considering in other areas. You know, we do it with the roads already. The equipment, that's kind of easy to get your head around that. You know, a fund for City Hall, a sinking fund. You know, we spend money on City Hall every year. There's no reason in the context of a budget discussion when you're trying to decide on, gosh, 4.3 mil increase, that you need to be deciding on carpet in the council room, okay? That's something that can much better discussed as, you know, maybe as a committee or in another context of, hey, okay, we've got this building maintenance fund. What do we need to do to the building over the next 5 years? And yet, it's just from a policy standpoint, from a predictability and budgeting standpoint, it's just a better way to go. And I'm not saying we can do them all now, but I think it's something to be working forward to. I want to talk a little bit about additional service considerations, and the title is admittedly a little biased, but basically these are items that when the department heads put their budget together, the message was, hey, budget's looking really good. You guys might consider some additional services, you know, additional stuff that you might need, you might need next couple of years, so that we could, you know, maybe work it into the budget because it's looking good. That was before we knew the budget wasn't looking so good. So these are the types of things that got taken out between that discussion and the discussion we're having now. We're looking at, and these bars just kind of represent, the red bars represent the dollar amounts associated with each one of these, but there's a label on each bar. The first one has 0.75, so that's the second one. Third one has 0.77. Those are the corresponding mill rates. You just divide the bar by 66,000 essentially, and you get the mill rate. So I'm not suggesting that there should be an appetite for further mill increases. I'm saying if there were, these are the types of things that you would have seen in the budget. Utility replacement fund, building maintenance fund, all these kind of funds, the asset management stuff. The street department had a pickup. They have a 96 pickup. They really need to get replaced. That would have been in there. Street department would like to replace their backhoe, so on a lease purchase type basis. They do have a need for a front end loader, a rubber tire front end loader, as we've discussed before. Painting the pool, that's $50,000, 0.75 mils. There's also a couple of personnel positions that we discussed about kind of in some detail. One would be a half building inspector. Steve Chick has eyes on maybe retiring someday, and he would really like to have somebody in maybe half-time, maybe he goes half-time, I'm not sure which, to train that person kind of as an interim basis for a year, and then that person might take over. We also talked about an additional person, a utility clerk in the front office to take some of the load off Nancy and Bonnie, especially this budget cycle. Bonnie's just been swamped with budget stuff. Nancy's been swamped with roofing permits. So those things were discussed. You know, they're not in the budget that you have now, but there are things to look at. The last slide is the schedule. And so I think, you know, unless you have questions or want to really just dig into some of this stuff after 10 o'clock, the important thing is, I think really the important date is this July 29th. That's our drop dead. We have to have the publication to the newspaper on that date. And what that means is that publication has to have the exact amounts we're spending in each one of these months and how much revenue we're generating. So we have to have the budget worked out by that day. That only gives us one more scheduled council meeting. So here in green, I've shown some possible dates for workshops, you know, off-council meeting dates for workshops. And then the orange dates are potential special council meetings where we could adopt a final budget before it's due. So I'll stop there.
Well, I would think we'd need it'd be good to have if we could get a workshop in before our next council meeting, looking at next week.
Absolutely, yeah.
Or the first part of the following week.
Next week would be good, because if we have some changes in direction, that'd give me an opportunity to work up
react
some,
and put
yeah.
some stuff together.
Yeah, it'd be better, I think.
I'm good whenever you working people are good. Tuesday the 12th? Is that what you said?
I said the 14th, the
14th,
Thursday, but
okay.
Tuesday would work for me, also. Those two, either of those 2 days would be.
I think Tuesday works for me in the evening.
I just.
Thursday would work as well for me in the evening.
I bow to you guys. You
Yeah.
guys, you know,
Yeah,
we're
it works.
flexible. So the 14th is fine with me, and if that works for you, Lori,
That works for me.
and you, okay. 14th at
6:30.
6:30? Okay.
Okay.
I make a motion, we have a workshop, budget workshop on July 14th at 6:30.
I'll second the motion.
All in favor? Say aye.
Aye.
Aye. Opposed? Okay.
Good. If you have any questions or any additional information, let me know before then.
I'm gonna be out of town the week of the 25th to the 30th, so a special meeting I won't be able to be at, except perhaps by phone.
Patrick, how does that affect quorum if we have only 3 council members?
Yeah, we have to have 4.
So it'd have to be by phone. If it, yeah, we're not there yet, but if it comes to that.
But we can always do some.
Yeah, right, hopefully we'll be where we wanna be on the 21st.
Yes.
maybe, right?
Yeah, well, that's the hope.
If not, I will have a sand drink in one hand and my thumb. It'll be at the beach.
And he can use my phone here. I dedicate it to Rick. I'll have a fresh battery and feel fired up.
Alright. Okay, well, thank you.
Thank you, Mike.
Thank you, Mike.
Make a motion. Oh, no, we gotta go through.
We gotta go through, yes, reports.
And that will be,
Is somebody gonna make a motion to table, the mayor's request on?
Yeah.
Oh,
Sure, I'll make a motion, we table agenda item 4L, discussing the vacant city council position.
Okay.
I'll second that.
All right. We'll just do a voice vote. Now, all in favor, say aye.
Aye.
Aye. Opposed? Okay. Advisory reports. Mike.
I have one thing. At your places, there's a copy of the fee resolution. Don't accuse me of being greedy, but Steve Chick has issued 494 roofing permits since the hailstorm. At $25 a piece, I figure we're losing about $75 each on those in terms of his time and Nancy's time. That fee is really at the bottom, very bottom end of other communities, and I'd like to propose that we raise that fee to $50. Patrick's redlined the ordinance here. The fence permit would also go up, mobile home occupancy, residential plumbing permit, demo permit, roofing permit, and above ground pool permit would all go from $25 to $50. I just, we don't issue 500 permits of any of those really in any year, so it really doesn't matter a whole lot until you have an event like this where it really does. And I think $50 is fair, and it really doesn't still totally compensate us for our time, but it's not really about our full compensation. So I'd suggest raising those if you're comfortable with that. I think we can do that just by a motion to revise the fee resolution.
And then the resolution, where we at?
971.
971. Anybody wanna make that motion?
I'll make a motion to approve resolution 971, establishing fees and rates.
second.
Second by Councilman McDaniel. Roll call, please.
Lane,
Yes.
McDaniel,
Yes.
Walker,
Yes.
Murdoch.
Yes.
Thank you, council. Motion carried.
Okay. Nothing, Atlanta?
No report for me.
Okay. Bonnie, you got anything?
Mom's got everything going on. She's just too ashamed to say.
All right, council comments.
How about him?
He said
So
nothing.
yeah, I already,
He declined.
quickly. I'm ready to go home.
So we're on to us. Danny, you wanna start? You got anything?
I'm good. So
Okay.
thank you, sir.
I just have one thing I wanna ask you.
Sure.
Is, did we do right now tonight, on the pilot agreement thing? You feel?
Yes.
Thank
I don't need all of these papers next meeting. I printed the ones that I need. Don't kill a tree over me. If you wanna do something, put them on a tablet. I'll say that over and over again. I just wanted to make 2 announcements. Remember Country on the Cob Saturday night? And Saturday afternoon, there's a lot of stuff going on at the barn, so.
There's what?
There's a lot of stuff going on at the barn on Saturday afternoon. There's kids tractor pull and a big craft thing and stuff, so
That's Saturday afternoon.
Saturday afternoon.
Okay.
Otherwise, I can't remember if I was gonna say anything else, 'cause
I don't have anything either, so we wanna.
I'll make a motion, we adjourn.
All in favor?
Aye.
We are adjourned.
It's not even on.